Michael,
Yes,
welcome
sir.
to Pure Value Podcast.
Thank you, sir.
Thank you for coming in.
Yeah.
As always, we're gonna do our handshake. Okay, let's do it.
Oh, yeah.
Yes, sir. Yes, sir. We're gonna do our handshake. Yep.
Let's go.
So, welcome. Um,
Thank you.
Michael Wang is a great friend of mine. We know each other for half a decade, and currently, I call him the Mr. Big Short. That he loves the value investment framework of things, especially on the short side. That's what he's currently working on at Columbia Business School. He started January this year, and he's the co-president of the value of the. So I want to read the official name correctly, right? So it's called the Columbia Student Investment Management Association.
Yes.
He's a co-president, and then he also has 6 years of experience working in New York City for an economic consulting firm. And before that, go Eagles from Boston College and a proud graduate of Boston College.
Let's go.
And we met, which I'll leave that story to you. It's a great story, I think, how we met in Hawaii through mutual friends, and then later on went on to have hopefully a friendship of a lifetime. And again, welcome, and let's do a little bit, if you don't mind, introduce to the audience a little bit of yourself, and hopefully what we sort of dissect and break down here can be your thought process, your critical thinking, which is I'm always impressed by, but now with the value investment framework that I think you are using that even more dynamically. And also, I've always been impressed by your ability to adapt to any environment, network, and just being a energetic human being, and I love that. So, Michael Wang, again, welcome. And
thank you.
Let's do a little intro for yourself.
All right. Thank you. Thank you all for having me. Great to be here. It's great to get out of the stone cold New York City and then be in the Cali sun and be in this beautiful office, beautiful setup, and get to chat a little bit more about my humble opinions in investing, my life, and my outtake in life, I guess. Well, I'm originally from China and came to the States when I was 16, spent 2 years in Pennsylvania, 4 years in Boston, as Robert has mentioned, 6 years in New York, and counting now. And now I'm at Columbia, trying to pivot into investing. And I'm naturally more critical person in comparison with Robert here. And I found my calling in short selling. Short selling just being a fascinating idea. It's exciting, adrenaline rushing. And I like to think that short sellers make the market a little bit more efficient just because you are calling the stuff that's overvalued and going back to where it's supposed to be. And being a critical person myself, I see value in doing that, and I got great fulfillment from doing that. Yeah, I guess that's where I'm at right now.
Awesome.
Yeah.
Why don't we start with, so since you start with that, why don't we start with sort of the two pillars, right? So if from the moment you joined the program to now, where I'm sure you guys went through rigorous process in terms of evaluating companies and dissecting financials, and then obviously you found more of a passion towards the short side. Help us sort of have this framework around how you think about, or what have you learned about looking at investments from either the long end or the short end. So that's sort of a question, part one. Part two is think about, or sort of help us, guide us through how what you've observed, which we talk a lot privately, right? We talk a lot, we catch up all the time. And by the way, this episode sort of came from our idea of that beautiful night in West Harlem, actually,
Yes.
where Columbia is and where you stay. After I went to the Robin Hood Foundation conference, shout out to them. They been donating to solve the poverty problem in New York City for the last 4 years. And after that conference, we had a great conversation at your place for way more than a podcast length, 6-7 hours, about life, about investments, about all that, right?
Yeah.
And sort of part two is you mentioned that what do you think separates sort of this natural difference between certain people are more suitable for not just the financial service industry, but actually more the investment professionals, especially on the buy side, right? So what makes a great investor? What kind of temperaments, personalities that generally tailor or thinking models tailor someone to more of a natural investor, therefore thrive at a value investment program, and then will go on to do greater things in that field? Or what might some people, nevertheless, they can be great business people or getting a lot of value out of the MBAs, but what kind of things they were sort of, let's say, lacking in terms of being a great investor? If you can share the light on both, on what you've learned from an investment perspective and also about the people side of things. What makes a
Right.
great investor?
That's a packed question.
That's right. That's right. Yeah, we throw heavy punches first.
Yes,
You gotta
yes.
come out of the gate.
Let's
Come out of
get
the
that
gate.
out of the way.
Yep.
So I've only been there for well, since January, so 11 months for now, and learned a load about investing. And I came into business school wanting to touch upon the investing pillar, and especially at Columbia, where value investing started. And I truly think of it as a wonderful experience. I came into Columbia as a blank canvas, and there are great professors out there, adjunct professors who are industry practitioners that introduce you to how they invest. And I think being able to see all those data points slowly you start to get a sense of what kind of data pattern recognition that you would like or you have that you have conviction to invest on your own. And for me, just based on 11 months of data points, I like to see things that are out of whack, where they're supposed to be. Think of return profile as stacked Legos, and you start with the treasury bonds, and that's your
Yep.
risk-free rate, right?
Yep.
And up from there, you will have different spreads, investment grade, high yield, and then you touch upon equity. That's how I think about it. You will have a map of return of assets, and then you find dislocations, whether that's dislocations from the above or below. And from the below, you will do the long, and from the above, you do the short. And I think having that North Star, your mental map, really helps you to navigate through a world that dislocations happen more and more often, and the market that's right now a little bit irrational at times. So that's for me how I approach investing, is to find the dislocations in things are where not they supposed to be. And in terms of what makes a good investor, I don't know yet. I still look forward to finding out more about it. And I see you as a good light pole for that, honestly.
I appreciate it.
Yeah. I think you have to be industrious. You have to be passionate about the subject. And more importantly, I think you do need a innate intellectual curiosity and honesty in order to do this job. There are, of course, investing is the industry where I see the most variety of personalities and backgrounds. It almost encapsulates all type of people. It doesn't matter what your background was, but what's important is that you're curious, you want to learn, and you're able to synthesize this information into your own opinion in a contrarian view. And if you don't have that, you may still do well, but I just don't think you will be able to evolve with time as the market changes. So I think that's my 2 cents on what makes a good investor. And that, I mean, you will probably have more to share on that end as well. You yourself is a good investor, you got a great track record, and you've had a bunch of mentors who have been great investors.
That's
and I think those lessons that you have given me and the spark of insights that we had over the past 5 years got me thinking about how I should express my investment view. Obviously, we are different people, different individuals. We have different. We're similar on personalities, but our tendencies are different.
Many ways to skin a cat.
Exactly.
Yeah.
And in order to have the pattern that fit ourselves, and that's how this market is so interesting. Everybody has a different view, even given the same information. And being able to synthesize that is probably a big part of it.
Yeah, and absolutely. And from a systematic standpoint, I think it's great to, if we look at this price discovery, right? So that's what a market economy should be, right? This is sort of the Adam Smith sort of preaching here, in a sense where, or at least he would agree with it, in a sense where, from his book Wealth of Nation, that's been around for 300 years. That sort of this, because people having different views, that leads to price discovery, right? Yeah. So this is something internally that I've spoken about quite frequently with my team too, that sort of just picked this up from looking at the framework, and one of the points I want to bring up is this Warren Buffett talked about this, which we actually were both physically present at. It was a great meeting we had there in Omaha this year, May 2025. The one where he sort of hang up the jerseys for Raptors.
Nice.
After 60 years of great performance
One of the
at
GOATs.
Berkshire. Yeah, probably the GOAT in my opinion. So I think what he said about this concept of the cathedral inside the casino, because the world has a lot of, from poly markets to all kinds of, to you betting on your favorite team on Sunday Night Football and stuff like that.
Right.
So there's this casino aspect, there's this cathedral. So for us, before we sort of jump into specific investment strategies, names, and things like that, just give us this concept on why. Obviously, I have a very high view of what the Columbia Business School is, and then especially the value investment program. Being we were talking about Buffett taught there. We're talking about Charlie Munger, met Li Lu there. Li Lu, the head of Himalaya Capital Management, that has had a great track record. Being in, and I started it actually in Pasadena 9 years ago when basically Munger and Li Lu lived there. We never met, but we're down the street, and that gave me inspirations. So what do you think about this cathedral versus casino concept? Obviously, I have my interpretation, understanding of what Buffett's talking about, and I preach this all the time to my team.
Right.
So that in this world, when people just thinking about placing a bet or buying a call option on Robinhood for a certain name versus the proper way of analyzing businesses and understanding what the investment returns will be like instead of the returns of speculation, what are the things you've learned, and how would you frame it in a more probably more eloquent way than I can do it? Of the cathedral versus casino that Buffett did it the best.
Wow.
That makes sense.
I haven't been in the industry, so
Yep.
this probably come from a more academic view.
Sure.
But I still remember as the first investing professor I took, everything is about price over value.
Mm-hmm.
And if you don't have a good view of either, then for sure you're speculating and you're just throwing money in a casino on the red roulette, hoping that you hit your number essentially.
Yep.
And but once you have a view, you have that North Star
Yep.
that you know what you're doing. And that kind of boils down to where price is somewhat easy, right? The price is on the market, you get to see it.
In public markets, yeah.
Exactly.
Yep.
But the value is where you got to have a view on. And that's where it's got interesting, where the information you have to synthesize. Eventually, you got to come up with a narrative. And I do think value and the public markets is a marriage between quantitative thinking and qualitative thinking. You got to match the qualitative thinking, the narrative, into the numbers. And also you have to be able to tell a narrative and tell the qualitative work from the numbers itself. And being able to come up with a full picture of where the value stands. And then go from there, we'll be able to tell whether you're paying a fair price, you're paying too high of a price, or too low of a price. And that's a bargain where we're always looking for. So to me, I think the cathedral part is really you go in, you put in the work, and you preach your view. And that's the difference between you're in a cathedral versus a casino.
Got it. Okay,
Yeah.
cool. And to add on top of that, this, as we've done in the previous episode of introducing the concept of pure value capital, that one of the things that I see we have on the wall that I've sort of, my core of the realization, let's just say, for the last 9 years of the investment method was the 3 P's of pure value: product, people, price, right? So for those who know, like if you think about the sort of the modern, especially this concept that's in the most advanced capital markets in the world is the U.S., right? So the U.S. has this view of growth investors versus value investors, right? The classic of like growth investors look at product, TAM, total addressable market, how big can the whole thing be? In terms of if you think about the West Coast, the Silicon Valley thought of like this is going to be big, let's bet on it, and type of thing. Price is like okay. Classic, let's say, we talked about this yesterday, David Einhorn, right? One of the great, especially in the 90s, a great investor, and now the returns has been coming down to, let's say, suboptimal levels. But, his ideas and sort of the original Ben Graham idea would be this buying the cigar bar approach, right?
Yeah.
what's the net debt, what's the net cash after debt on this company, and how much you can buy it for. Maybe there's a 10% yield there, and there's market's mispricing it. Let's buy something that's incredibly cheap on a numeral basis, on quantitative basis, and then we can have the returns that way, right? So what I think actually we've done right, and obviously with luck as well for this track record of 9 years, 34.5% CAGR net returns is the we look at both product and price. So something has to be an extraordinary product first, and then it has to be valued correctly. Then I think both growth investors and value investors sort of overlook the middle, which is the people. Ultimately, it's the people. A company is nothing but more than a bunch of people getting together to provide a product and service, can be lower than the cost that they can input, and to output value to the consumers or businesses that are willing to pay for them. So how great a product is ultimately decides that. Then this ties to sort of my thinking around the cathedral concept. That's why I'm so sort of, I would say, this is probably a top 3 passion of my life, is to have this concept around, it's to protect the cathedral part of it. Because Buffett's been down there he's 95, but him and Munger did this, Berkshire being at $1 trillion for benefiting a lot of people, hire a lot of people, and for the last 6 decades. The idea of the cathedral is that when Steve Jobs goes to create something that's 1 billion units shipped around the globe, that we use for everything. It's your bank account, it's your Spotify, that's your music, it's your communication method with your friends and family, it's how you stay connected, it's your business emails, it's your business communications, it could be your video conferencing, it's everything, right? And also it's slick, it's designed well, it's beautiful, it's easy to use. So when you build something like that, then you deserve to be valued properly and continue to compound and grow. So that's the cathedral aspect, right? It's that when people go in there and produce certain goods, products, and services that benefit the world, that have marketplace value, and they have a long-term, the business can justify itself as another charity, in a way, can sustain. Then that way, it's a good thing for the system. So the casino aspect is, I go, Cowboys are going to lose to the Super Bowl. They're not going to win the Super Bowl this year, likely to be the case. And you're going to bet on, let's say, the Eagles. And then we're going to have a debate, or in 2024, which we were live at the event of that of the NBA Finals. You were there for your proud Boston Celtics when they won the championship, right? 4-1 against Dallas Mavericks, right?
Yes, sir.
Damn, that was double. Sorry, Dallas people. That's a double. That's a double. Trust me, that wasn't intentional. We were actually there for that game 5, right? And then to bet on the game, but that is more of a zero-sum game, right? Because 2 teams play, one wins, one loses. We don't know who wins or who loses. Obviously, there's analytics behind it, but then the betting aspect, it doesn't generate as much value. I mean, of course, there's the whole industry behind it with gambling casino. Of course, that can hire people and build wealth too. But generally, it's not in the business of producing valuable things for society. So I think about the cathedral concept that way, if that makes sense.
Yeah, absolutely. And I think Apple is a great example there as well. And I feel like there's always a debate. Okay, you're a growth investor or you're a value investor, and to me, there's just no difference between growth investing versus value investing.
Yeah.
If you're not value investing, then what are you doing? There is a reasonable price or the right price to say for growth. Right? If you're just paying too high of a price for growth, then you're not investing. You're speculating to be growing faster than what already is baked in the price.
Yep.
A certain price implies a certain growth rate.
Yep.
And you have to buy that growth for cheap too.
Yep.
Think of Apple as a great example, right? And when Buffett bought it, right, it was below 10 times earnings.
Yep.
And that company will still grow. So you can buy good and great businesses. And that's why the market nowadays doesn't seem to be very efficient at all time. Right? You will find those dislocations that will allow you to buy great businesses at reasonable or even great prices. And you're paying for that growth. If you're paying $1 for that growth versus you're paying 50 cents for that growth, obviously the latter is better. So I do think that for value investing versus growth investing, I think you should always resort back to value investing because it's all coming down back to price over value. If you're just overpaying for the value you got, well, sorry, you just got the short end of the stick.
Yeah, and then with more, now can definitely some examples that what you what you've studied, what you think you shared some with me already. But what are some sort of I can think of the Life 360 example.
Right.
I can think of yesterday we talked about. I think the ticker name is VICR
Yeah.
example. And if you want to use those, great. Are any of the sort of examples that you can give us an insight into especially for you, the short selling process of looking at ideas or things might be overvalued or sometimes it might be even fraudulent. Because again, back to the cathedral versus casino concept.
Right.
If let's say if we agree that Steve Jobs was the cathedral part, would you say Sam Bankman-Fried is the casino part? Or even right?
Right. If I had great information, I think I would have better comments to make or better views on
Yeah.
Sam Bankman-Fried.
Yeah.
I-
Or examples like that. I'm saying
Right.
basically, or Enron, right?
Yeah.
Basically more of a sort of a where Bernie Madoff, right?
Yeah.
So that's more of the casino aspect of the
Man, I mean,
yeah.
frauds are tough because frauds you will
Okay.
never know when those end.
Yep.
It's kind of sad that
Yeah.
truly truthful CEO and management
Yep.
that give you great information
Yep.
and being truly authentic when they say, "Oh, sorry, we just didn't do as a good job, and this quarter is going to be bad," the price will fall. Fraudulent management, they can keep a fraud going for a long time, and the short sellers will get really burned in that process. And you don't want to be on that end of the table, right? To be able to call a fraud when a fraud is going to bust. That's really hard. And for me, a really important way I think about it is where is the catalyst when that catalyst is going to reveal itself.
Okay.
And we can use Life 360 as an example.
Yeah. Tell us about the whole thing.
For sure. So
In case some people don't know about it.
yeah. So Life 360 is a location tracking app
Yep.
that allow parents to see where teenagers have been, what their driving behavior has been,
Yep.
and they got their data from Apple or Android. And to me, that business just struck me as odd. And they were at 400 million revenue and trading at 7 billion at once when I was looking at it. It just didn't strike me as a business that was a super strong mode. Of course, the users are sticky. I think the investors love the growth story. They don't see a lot of churn in the users. And what I saw was that if you really lay out the free user base, the people sign up and the paying circles, and you see the recent quarters from 2022 to 2024, and of course, first quarter and second quarter of 2025, that's when I looked at it, is the customer acquisition cost has been going up in more recent quarters back to 2022 level. And what that kind of suggested to me is that the lower hanging fruits may be gone, and the methods that the company has developed of acquiring users have not been working, or the penetration has not been there in their favor anymore. It may be just in a more saturating market that there's just so many users that want to use these services, and you have to pay more to acquire more users to do what the product that they're offering.
Yep.
And of course, there's also an overhang of Apple and Google just come in and completely wipe out the business.
Yep.
So that's an overhang.
Yep.
But what you really see in that observation is that there's going to be a time that they're going to have trouble to attract more users. And that's what they showed in the third quarter. And once the Wall Street see that they're having trouble growing their free user base, while the company is focusing on we're going to convert the free users into paying users and monetize on free users through ad and data partnership, that's a growth story that just doesn't keep growing anymore. So if you see the top of the funnel, if the top of the funnel stopped growing and you just want to push ads to your free users and you want to sell the data to the data partners, then that business innately is not growing as much.
Yep.
And that free ad and selling data will also churn away your consumers, right?
Yep.
All the free users you have now, the stickiness that you have developed over the years are also under threat now.
Yep.
And with that understanding, the stock dropped 20% on the earnings day.
Yep. You texted me that day. You
Yes,
said
sir.
I called it all right. Yeah.
Yes, sir.
Yeah,
And I just think that's the catalyst, right?
Yep.
Once the earnings come out, earnings could be a good catalyst, and there are other catalysts that you can see. So what you see as a short seller, often contradicts with the market because you don't want to short a stock that is just commonly shorted. Think Tesla at the time, the most heavily shorted stock at the time.
Yep.
If the short interest got really thick, then the short sellers can get burned through the squeeze.
That's a great point. So what was when you, before the 20% drop, which you called out correctly, and that you realized sort of being at least a 20% profit.
Yeah.
What was the flow at the time? Was the short interest time? What was the borrowing? Right around, give us some data around that.
Right. I wish I could have the
Okay.
data right out of the top of my head.
Yeah.
I remember it was being pretty low short interest ratio, probably below 5%. Did not look into the borrowing cost, and the
5% flow. Okay.
Yeah,
Yep.
it was a pitch for a class,
Yep.
and
Yeah. Understood.
it was an assignment. Of course, in my PA, I put some positions on it, and it's just strike me as how does someone miss this? And once people see it from your perspective, they will come around to understanding
Yep.
of what
Yeah.
you're actually paying for.
Yes, right.
You're not paying for a growth stock anymore. You're paying for a stock that's trying to get more profit from the free users, and they just turned profitable. And I think that's what a lot of the street was underwriting, is that their path to profitability is proven in that 2024 and first 2 quarters of 2025, and they expect it to keep growing with their operating leverage. But well, lo and behold, it's not happening.
Yeah, and from a product perspective, you spoke to our mutual friend at Apple. Shout out to Patrick.
Yeah.
And
Yes.
what was that conversation like? Because this sort of Google has the maps. Apple also obviously has the ecosystem.
Right.
Tons of billions of installed users. What was that conversation like with the sort of the big tech competition aspect of that, right? Because if people just look at this from an audience perspective, that parents want to track how their kids doing and stuff.
Yeah.
That is obviously a product. There's a product marketplace fit, right? There is a need for that, just like a Ring cameras, right? People need that for their home security. So, what was that conversation like with, let's say, with our mutual friend at Apple, and when you did the sort of the investigative journalism part of the work
Right.
On the product? What was the feedback like?
So talking to our friend, I mean, great to have Patrick as a friend. Shout
Yeah.
out to Patrick.
Yep.
He's amazing.
Yep.
So from Columbia's curriculum standpoint, they often teaches you what is a value-added research, is that these are the researches that are not commonly available to the public, right? If you just read the expert transcripts, that's table stakes now.
Yep.
Third bridge alpha sense, and you want to do some primary research that only you get the information to, and that presents itself as somewhat of an information edge. Often it's really hard to get that nowadays. And talking to Patrick was great because I was able to hear from his standpoint how Apple approaches it. And the call really helps me understand what are Apple's concern and why they have not come into the space. Because I thought about using that as my primary thesis, but that is more of a prediction than observation. And Patrick's answers helped me understand that, is that Apple will not come into the space due to privacy concerns. And Apple is just really careful about getting into that. And if they have an app that are getting the data from Apple and then selling ads on their behalf, they would rather take the money from the third-party app, right? Why would Apple do that? It just presents a legal risk for them. So for me, that was good understanding of why big tech won't come in and why it's a weak thesis to short the stock.
Sure.
Yeah. And for me, the more imminent of a risk is, for example, in Texas, the AG, Ken Paxton, has been settling those large lawsuits in the $1 billion with Google and Meta for monetizing on the geolocation data of Texans.
Yep.
And for me, that's a more imminent risk. And coming from an economic consulting background,
Yep.
I can see how
Yep.
these legal and class action lawsuits can actually hurt the business, and not because how much of a settlement they're gonna pay. Like if we just think how many Texans there are, about 38 million, and then the $1 billion, like each user will get like 200 or so, and if you times that with what Life360's users have in the penetration rate, you kind of somewhat get a approximate dollar that they have to pay in their reserve, as a liability reserve. However, more importantly, this could stop Life360 from expanding on their ad and data partnership business. If they see the legal risk, they won't progress as aggressively. Then that growth rate will innately
That tapers on top line growth.
Exactly, it'll just be curtailed.
Yep.
And in that case, it's just not a growth stock anymore. You cannot view it as the growth stock at 40%. And also, there's a huge difference between a stock that's growing at 40% a year, 25% a year, and 10% a year. You pay variously different prices, multiples on that. So once
Because that terminal DCF is different.
Exactly.
For us, long, yep.
Right, the terminal value, and also if you really bake in the PE multiple, each PE multiple will indicate a different growth rate for a X number of years. If that runway is shorter, that multiple is lower.
Yep.
Right.
That's right.
And therefore, if you view the business in a different lens, then it should not be valued where it's at, and which is 400 million and 7 billion market cap. That's what's 13, 15 times sales. That
So the latest annual, just to get the numbers, the latest annual revenue number was around 400 million.
Yeah.
And then at the time, the company was valued at 7 billion market cap.
Yeah.
Got it. Okay. And perfect segue into the economic consulting background, which you've done for the last 6 years, right?
Yeah.
Before this new value investment journey at Columbia, which personally, subjectively speaking, brought us closer with your investment training, and we talk more about investing and stuff. But we've been friends long before that, and know your career right before that. You know, Michael would famously flying to San Diego to hang out to catch up with me, hang out, and like wake up at 5 a.m. to go to work because
Yes.
you know, East Coast was 8 o'clock already, and he's got to get his economic consulting stuff done before he can go out to surf and do other things with me when I was in San Diego for the last many years.
Yes.
What was the what was the lessons there? And again, for those who don't know, like, tell us a little bit more about what economic consulting was, and what you do. What did you do there? What were the sort of the biggest takeaways, learnings? What was the daily process like of economic consulting?
Right. Without really getting into the details, I think from a higher view, what economic consulting does is they use quantitative econometric methods to quantify things usually in the legal space, at least from my vertical of a practice, to quantify those problems that aren't usually quantifiable.
So it's different than lawyers, right? So to tell like the novice audience, like what is the difference between that versus like a trial lawyer?
Right.
That's detecting fraud, let's say.
So for a lawyer, of course, they have to pass the bar. They have a lawyer. They went to law school. They have the lawyer license. And for economic consultants, they help lawyers to come up with the quantitative arguments for their clients. And sometimes we get asked about fair opinion assessment, but a lot more times we got retained by a law firm to help come up with quantitative arguments for the clients as well. And we often have experts who are PhDs in economics within different areas, whether that's securities or labor or antitrust. And some of the cases that we did are, for example, securities fraud or labor wrongful termination and class action lawsuits. That's within our practice area. I guess one example that we can use would be
Perfect.
For example, if Apple messed up its butterfly keyboard and that constitutes a misleading marketing, how much should they pay back the consumers? If there's a class action lawsuit laying out there, then we can estimate the damage. Or Meta leaked its data due to privacy risks, and how much Meta should really pay back its consumers.
What about Diamonds Forever or some like if you bought someone like Tiffany that your marriage is supposed to last? Do we get money back on that, or you get the marriage, the prenup back, or half the assets? What happens to that?
Well, if there's a class action lawsuit out there, then we'll probably have our expert look at it.
Okay.
Well, at this point, I don't think there's outstanding lawsuit right now. But keep me updated.
Because you know, jewelry's the companies, the Tiffany stuff like that, they advertise love is forever. You know,
right.
If you,
there's a fair amount of lawyering, right,
That's
to prove why that constitutes misleading marketing and misleading advertising. And from that angle, we can do, for example, scenario analysis. How much of that is liable for misleading advertising? Right? For example, I remember there was a vitamin case that I did, and we come up with a rather smart argument, is that what is the value of multivitamin? Right? They're marketing it as a very healthy for you, but how much of that, right? How much of that is value? And turn out that if you are vitamin sufficient every day, you don't get any value. The only value is when you get multivitamin, you have vitamin deficiency,
Yep.
then it produces a great health benefits to you.
Got it. Yep.
So
Yep.
from that understanding, it's really like an insurance, right? You're paying for an insurance to make sure that you are multivitamin sufficient every day. And why does that produce value? Because the only other alternative, at least right now, before I don't know the Theranos stuff, is that you have to do blood work, right? You have to do blood work to detect how much vitamin is in your bloodstream.
Yep.
You have to make sure that you're healthy.
Yep.
So that's where it actually produces value,
Yep.
relative to, okay, this is a misleading advertising because it doesn't have value for me per se because I'm a vitamin sufficient person.
Yep, that's right.
But it does produce the value in the insurance part.
Yep.
So that's the type of lawyering and arguments that we make in order to really quantify these things, right? So how much of that is liability?
Yeah. And from a point of sort of, if you think about how that process is essentially, in a way, that's investigative journalism as well, right? So what links that finding truth in the economic consulting aspect, the legal aspect, to this idea of looking at investments either on the long side or the short side, which you prefer, that what type of thinking that links to? Would you say that 6 years, right, of professional experience or professional training that led to this point that you find to be very useful? That you would be different. Let's say if you were at an investment banking job, or if you were at if you are at a management consulting job, we've had different things that typically bright grads like you, fresh out of BC in 2018, that would have gone to. What was something that sort of taught you throughout this process?
I didn't do investment banking or management consulting myself, so I couldn't speak too much of how different it would be. But I can speak of how I find economic consulting benefited me in doing researches. Essentially, you're doing research, right? And a passion for research is you're really looking for insights that are not generated before by other people. Sometimes you can look at sell-side reports, but come on, you have to have your own thoughts and your own thought processes. And from economic consulting standpoint, you're also really trying to figure out what could have worked. So usually you will have a couple theses, right? And then from the thesis, you have to find the data to back it up. And once you find the data could be telling a very different story, right? And then that thesis is gone. Then you have to come up with pivoted to new thesis if you want to prove your point. So I do think economic consulting helped me to craft this narrative, to look for data and find the appropriate data, and when data is not available, find creative ways to find a proxy data for proving your point. And I think that intellectual honesty is really important. You have to be able to see the data, interpret it, and based on the new information, insights you have extracted from those data to craft your narrative and craft a convincing, compelling point to tell people why this is the appropriate way or this is the value.
Makes sense.
So, and I think that just directly translated to investing. And I have benefited a lot from the professional training I got from that job, for sure.
Awesome. And then obviously the world changed in November 2022 in terms of how especially knowledge work can be done, right? So now looking at it, would you say this is the classic sort of Gen AI question that every analyst asks on the earnings calls and stuff like that? My question is this sort of, how do you think AI is changing that thinking process? Because when you describe there, it's a lot of raw training, mental method building. That's from classic research. So let's say if Buffett was going through library, yellow pages, stuff like that, we grew up in the era of Google search, 10 blue links, but you still have to dig in, click on the links after links to read
Yeah.
about yourself. Now with Gen AI, what do you think that the process changed? Because you probably, there's 2 years overlap there when you were still doing economic consulting,
Yeah.
and Gen AI already came about, right? But obviously maybe a little bit less powerful than GPT 3.5, 4.0 kind of thing.
Right.
Now it's 5.1, and then we have Gemini 3.0, which is incredible fast, and
Yeah.
Anthropic and all these things. Now obviously, but you started your Columbia career at the Value Management program, obviously with Gen AI already booming.
Yeah.
So how does that change one's process when it comes to the type of work that we just talked about?
Yeah.
And would you say there are different things that there are different causes that will cause you to do things differently?
Right.
Or if someone, let's say, start fresh now with all the Gen AI tools, but did not have those thinking process building, what would those be like?
Right. I still see the benefits of doing the research yourself
Yep.
instead of just asking AI a bunch of to do the whole thing for you.
Yeah.
I think there are appropriate ways to utilize AI and accelerate this process.
Yep.
Can't speak of much of the economic consulting job because it is confidential. You're dealing with your client's data.
Yep.
And you don't want that on
Yeah,
OpenAI.
and you guys are
platform.
subject to the same sort of this legal process of confidentiality
You have
agreement.
to sign NDA and
Attorney-client privilege applies, or
yeah, client
Okay.
privilege applies
okay,
to.
so
Yeah.
okay, so for your firm, it's the
Yeah.
same as another law firm, as in any reputable law firms, attorney-client privilege,
Yeah.
exact same sort of legal language applies to your
Yeah.
term as well.
We have to treat it with the highest confidentiality
Got it. Yeah.
and in the legal process,
Yeah.
and we always have to use the file transfer of high security too.
Got it.
You
Okay.
don't want these data to be in
Yeah.
some LLM to be trained as a pre-trained data.
Of course, yeah.
Right?
Yeah.
So that part of the job, and also I've been out of that job for a while now, so
Yeah.
I don't know how fast that has been catching up
Yeah.
or how fast that they're adopting LM and chatbots now.
Mm-hmm.
But from the investment processes, and at least from my 11 months dabbling into this space, I think it's a crazy accelerant to how much you can do.
Okay.
You can
Crazy
have-
it is, yeah.
Exactly. You can have a lot of things, and there are a lot of AI tools nowadays. Not to give any ads, not pay. Like for example, Hudson Labs, AlphaSense, they all have the AI built in, right?
Use Alpha Sense. Mhm.
Exactly. And once you synthesize those information, because that's what you need to do a lot of times, you need to do like a primer, for example. It's a new business, it's a new industry. Asking AI to do a primer is perfect. It can save you a lot of time.
Yeah, the sort of the junior level beginning ground research,
Exactly.
right?
And you can do a sniff test. And I do think like the first 12 hours, there's no replacing of building a model, reading the 10K, reading the 10Q. But from a primer sniff test, because as an investor, the most important thing for you is time management. You only got 3,000 hours a year. How
I
you
can't
do-
argue that for anybody's life.
Exactly.
In general, yeah.
And how you deploy that time became extremely important. So it becomes how fast can you kill an idea that's subpar. If you spend 20 hours killing an idea versus you spend a week killing an idea,
Yeah.
that makes that makes all the difference. So I think with AI tools built in, with the primer that you do the sniff test, you can get the idea out of the door 10 hours.
Yeah.
That's a great accelerant.
Throughout my 9 years career, that probably is the biggest change I've looked at internally, what I've done. That the first 7, I would say, I would spend about at least a few days on an idea. Starting around 22, 23, especially last year, certain companies I look at, within 15 minutes, I would know this is something I need to spend a week on,
Yeah,
or this is something I'll look back later.
exactly.
Just sort of the 3 piles of
Yeah.
that. And Charlie Munger famously have that too hard
Right.
pile.
Too
Too
hard
hard pile,
pile.
we'll
Yes.
look at that later. But the general like yay or nay, hell yes or hell no,
Yeah.
was very quickly done.
Yes.
I look at 5 metrics, listen to 1 earnings call, and a lot of times, there's, I talk about this like with intuition, you can build over time with listening to 80 quarters of earnings calls, and you know which CEO sounds like they're under-promising, over-delivering, or which one's just simply promising.
Yeah.
So with those sort of a little bit time spent, a few hours on things, then I can quickly move on. I think that aspect is very underrated
Yep.
versus people just, but then that comes from a vast amount of practices, right?
Yeah.
So choosing intelligence, which when we said to our sort of second segue on what brought us together, the experience journey, but mostly sports and how we live life and a lot of examples, right? The thing I think about is, and I talked to a lot of to my close friends about this with people in the software field, in AI field, stuff like that, is that with AI now, I think and again, I don't have an answer for this, but this is a good open-ended question, is that how do people go from, let's say, students to junior level professionals to senior know-hows and to masters of the craft, right? The idea is that you have to know a few kicks right. The famously, Bruce Lee says, it's not fear a man who practices 1,000 kicks, but a man who practices kicks 1,000 times, right?
Yeah.
But if you don't try all kind of stuff, how do you get there? So the worry, or at least the temporary concern, let's just say, now with AI is that how does one accumulate the know-how of, let's say, 7 years of looking at companies, spending a lot of time on looking at them. Then now this person goes, boom, 30 seconds, next one, boom, 50 minutes, one earnings call, the CEO doesn't sound right, next one. This industry looks like it's extremely important, incredibly big, but incredibly competitive with no moat, such as airlines for the last many years, or things like that. It can change, but right. So, like, how does one build intuition without doing unnecessary work? Because AI can streamline a lot of unnecessary work, but intuition a lot of times actually comes from that. So the right way to do it is actually eliminate that. Yes.
Yeah.
But I think it's hard for young people to sort of going through this phases, and we might be the last sort of gen because we started this, 8-9 years ago before really Jen and I took over. But for fresh graduates, right, who just graduated this year, last year, things like that, it's gonna be tough. What's your sort of take? There's no right answer. Just indulge me on this. I've been talking about this with a lot of people in the tech field for the last year and a half since when I was in the Valley, in Silicon Valley.
Right. And this is my personal view again. And I think there's just no substitute in doing the reps yourself. Like, you still have to go through those reps in order, because what AI could do for you is really, you ask the question, it give you a prompt, but you have to know what to prompt the AI, right? You have to know what questions to ask. You have to know what you are looking for. Right? Everybody is looking for different things in a business, right? Some people may prefer, they think management is really important. Some people may think, okay, the product's really important, product, people, and price, right? And others may look at different things, but you have to know what you're looking for to help you make that decision. And you can't just outsource that intellectual work to AI. And there's no substitute in getting to knowing what you're looking for, then going through the reps yourself. You still have to train yourself as an AI first. You have to predispose yourself to a lot of data to pre-train yourself. And then you have an operating model, you know what you're looking for. Then AI will become your best analyst to help you find the data you need, information you need, synthesize it, and then you make the judgment call. You cannot outsource the entire decision-making to an AI, because come on, if everybody's investing with AI with the variant view, someone with a variant view is going to win.
Yeah, that's right. And speaking of the question, the dichotomy between the question and answer. Talk about this, that he's mentioned with sort of multi-planet species and all these conversations we started with the Hitchhiker of the Galaxy when he read as a kid. And he said the line that hits the hardest for him was this idea of universe is the answer, what's the question? It's always the question that's harder. Like for me, I'm passionate about society, how things are being built, especially how can we sort of benefit the greater good and for the vast majority. So for me, I've always looked at the core of humanity is the answer. What's the question, right? So the answer is how can we benefit humanity, and what's the question? That's the right question. But I think, again, I think a lot of times what I've observed with, I think, let's say, new entries to, anybody who's a rookie to a new field, doesn't have to be fresh graduate. Like if I were to enter the film industry tomorrow, then I would be a rookie as well, right? So just because I've been investing for that and being around it as growing up as a kid, so for the last decade. But I think the idea of this is that knowing what to ask is the biggest difference, what I've seen between rookies and experts, in terms of looking at things. And without the sort of relentless passion of going through each rep. So that still goes back to this, sounds cliche, but it's for the love of the game. So one has to love the process and go, wow, like at this point, we have 5,000 public traded companies. I've looked at probably half of them already, the type of thing. And deep research on probably like 400, 500. And again, each time they change, right? Like Netflix recently had a big deal, merger acquisition deal with Warner Bros.
Yeah.
Greg Peters, the co-CEO. I mean, I remember Greg Peters was the head of was one of the guys on a earnings call that has 11 people on it. Greg Peters wasn't even like big at Netflix yet, let alone the co-CEO. I remember the time when Tesla Rentals wasn't even the co-CEO with the main person who was in charge of content and stuff. Reed Hastings was the CEO and chairman obviously at the time, and Tesla Rentals was sort of the second guy in line to take over.
Right.
Then become the whole co-CEO and Greg Peters and have a co-CEO model, like the whole thing. I remember the time where forgot the gentleman, I think Barry McCarthy, yeah. So my memory still works pretty. Barry McCarthy was the CFO of Netflix and then went on to be a CFO of Spotify. And now Barry McCarthy actually went to do what's it called, Peloton during the time to save the company, become a CEO there. So all these things, then you have a long-term, again, the product people pricing, you have a long-term track record of people as well, right? Sarah Fryer, CFO of OpenAI, she was the CEO of OpenDoor. What's it's called? It's the name. I want to get the name right. Of the company that's a neighborhood app. I believe it's called. And then she was the CFO of Square, with Jack Dorsey before that. So I remember, like, so you have long-term track record of even people over time, right? So I think it takes quite a while to sort of follow business trajectories and see which thesis played out, what type of people are truly ones I call missionaries and we're chasing after, we're having a mission versus mercenaries. Then you can sort of see throughout the process what kind of work they can bring to the table and all that kind of stuff.
Right.
So, there's no amount of. I think this is, to use Aristotle quote. This, early 30s is sort of the best time in one's life, and hopefully we can. Nothing lasts forever. We can sort of enjoy while it lasts, in a sense where it's just because it combines one's experience with energy.
Yeah.
So you still have both. You have 20s energy, but you have experience already.
Yeah.
So I think that idea of like, there's nothing like a replacing experience. So I think that this Gen AI revolution, what's going to happen is it's going to accelerate senior people with more know-how, but with junior people, they can't cheat the reps.
Yeah.
Otherwise, I think it's going to be tough for, in the immediate future, probably the job market. But most importantly, for how young people is going to learn.
Right.
The university system is going to change. Like, I talk to my wife about this all the time. Education system is going to change. How people are going to job markets after graduating universities, if they do, that's going to change. And we don't know what the second, third order effects yet.
Yeah.
But it's just something that people have to be aware of.
Yeah.
And sort of get the reps in, if you will.
Yeah,
Makes sense.
I think you can see it in the employment data right now, right?
Yeah.
The younger people are not, the junior positions are actually decreasing, and the senior positions are slightly increasing.
Yeah.
That's in the labor market right
Yeah.
now, and that companies are already realizing these effects, right?
Yeah.
And
Yeah.
I do think if you are using AI for every assignment, you're in school, right? Every assignment for a final as well. That's a little bit of an intellectual laziness there that is not going to benefit you. The best way is to learn to use the AI tools, but not to outsource the most important thinking part.
Yeah.
Like, you have to be a 10x person at what you're doing with AI.
Yeah. Yeah.
And the 10x part is not to take away
Yep.
your thinking,
Yep.
but to take away the mundane and repetitive tasks
Yep.
for AI to get you.
Yeah, and Hexie and I, our great mutual friend of ours, talk about this. We had a call last week on this about SaaS industry, subscription-based revenue models versus outcome-based, right? Consulting traditionally, that's hourly based. It's how much hour I put in. It has to be a solution-based situation now. Let's see, if I were to hire a person, what's going to happen is that, can you be a problem solver
Right.
in this situation that we can allocate time to, right? So what's going to happen is that I think a lot of times, just like how individuals contribute versus how companies contribute, the companies, it can't be like, I've sent 5 consultants to your location
Right.
to diagnose a problem, each costs $2,000 an hour,
Yeah.
boom, the day is done, 10 grand bill done, invoiced, and sometimes hope for the best if the problem's solved.
Right.
Or subscription say, I'll provide you a tool
Yeah.
of, for example, after things like that, $20,000 a year, having a tool that you can do investment research, stuff
Right.
like that. It's not an easy underwriting process for the organization as well. But then what happens is it has to be outcome based.
Yeah.
For asset management industry, right? We're in outcome based, right? Things happen, you pay
Oh, yeah.
2 and 20. They don't happen, you don't,
Yeah.
right? Especially on the carry portion, right? You
Heck
don't.
yeah.
So I think being outcome based, that's going to be the future of employment, the future of jobs,
Yeah.
the future of business outcomes, the future of likely AI monetization too.
Yeah.
So and obviously things are evolving. This is very early. This feels like a 94 to 90. Now anywhere between. I mean, people want to call it a bubble. Let's say then it's 99.
Yeah.
People want to call it early. Then it's 94. Let's just call it. I think sometimes truth is in between the middle. Maybe we're 97.
Right.
Jeff Bezos is already there somewhere building Amazon. We don't know yet. When the tide goes out, Buffett says we'll find out who's swimming naked.
Right.
Then we'll see in 2000, 2001, maybe 3-4 years later, we'll see who's Pats.com and who's Bezos, and then the world moves on from there, and then great innovation comes after.
Yeah.
So I think at least for now, this understanding of how AI is going to change things,
Yeah.
and focus on the outcome, being a problem solver,
Yeah.
regardless for clients, for yourself, for your
Right.
business, for your employment, for your being outcome driven.
Yeah.
It's a lot more important than being hourly, being those type of driven
100%.
situation.
And I do think there's about an incentive alignment there as well, right? Why would a business just pay someone money for the hours they worked on stuff?
Right, and then that consulting
Right.
model has been around for the last,
Right,
yeah.
that's just a misalignment, right?
Yeah.
Like naturally, you want to expand the hours that you work on the project instead of getting the job done.
Yeah.
Right, because you're just getting a fee. The more hours you work on, the
Yeah.
more revenue you bring in, and that's just a misalignment from whoever is purchasing the service.
Yep.
And I do think AI as an accelerant to that will become more value add to the
Yep.
society in terms of getting more outcome driven.
Yep.
Right, getting stuff done is
Yep.
really important.
Yep.
Rather
Yep.
in relative to, okay, let me show you a ton of analyses that didn't really aid in coming up with the problem solving part. Yeah, but that's my personal opinion again.
Of course.
Yeah, some of the consulting certainly has its own value when you're doing research and nobody else is doing, and especially if you're compiling data to show everybody that okay, this is the trend. It helps everybody understanding because you are creating new data, right?
Yep.
You're generating new data, or you're pulling in data so they can generate new insights.
Yep.
But there are certain types of consulting and professional services that are kind of just misaligned from what could really be value adding in a business world.
Yeah, and that if that brings that industry change to society, then jobs will change.
Yeah.
Those businesses will change.
Right.
Knowledge work will change.
Yes.
And if the world, we think a lot about this atoms,
Yeah.
the world of atoms, the world of bits, right?
Yeah.
If the world of bits change, then there might be more shift to work through the atoms. I
Yeah.
tell our mechanical engineering friends all the time that
Right.
you will always have a job. You work with your hands. You can put a roof up. You can build engine motors. You probably hope you'll be fine. As robotics will have its day and sort of progress along too. But this bits revolution probably coming for
Yeah.
the professional services that especially we know about law
Definitely.
firms, consulting, all these
Right.
accounting firms these days.
Right. And I think that's the deflationary effects from AI, right? And beforehand, your research may not be even the same, and now everybody's using AI, and then it's become commoditized.
Yeah.
And then whoever delivers the solution becomes
Yeah.
the difference maker.
Yeah.
Right.
Yeah.
And in that sense, we're actually allocating resources more efficiently because of AI, because you have to race to the next step in terms of problem solving.
Yeah.
It used to be the big companies have the resources just to compile researchers together, and that's good enough.
Bloomberg. Yeah.
Yeah. And now it's about anybody with an AI will be able to compile these researches within a short or reasonable amount of time.
Yeah.
And now you're really competing to reach to the next stage.
Great point. And then if there's a clip from Satya Nadella, we can look at this if we together. I think it's interesting. There's the model layer, and there's the knowledge, the future of a company. Satya Nadella, I believe I can find this. Future of company. He's talking about why would a company even exist, right? So I think it's. So if there is, I think there's sound. So there's basically he's talking about, and we'll put this one clip in the podcast. Like, people think there's winner take all, and there's this. I'll transcribe to you basically what he's saying. I watched the sort of interview entirety. Is the idea of there's the model layer. If the model solves everything, then there shouldn't be a company, right? What do you want, right? Then there's know-how. Let's say if Microsoft knows a certain problem to the enterprise clients better than others, so there's know-how layer. And know-how layer, that's that human intellectual capital that's embedded in the organization. Like say Gemini can't do what I do, at least not yet. But then that know-how layer that my team might work on a investing idea, then that piece, the rigor, the thinking, or the process, that's embedded in relation. Then you have the output of the outcome, right? So you could use the models and what's currently happening, the best world-class tools to embed that with your know-how. But eventually, to your output, regardless of service or a product that you're serving, that outcome has to be sort of connected to this piece. Otherwise, the foundation model can't, if the fundamental can produce, obviously they're not accurate enough yet, can produce a good enough outcome, then why the middle layer?
Exactly.
And I think every business, every entrepreneur has to answer that question.
Yes.
Otherwise, or every person who's seeking a job
Right.
has to answer that question.
Right.
Where is that embedded in?
Right.
So,
And that's the value creation, right? The real outcome now.
Yeah.
Instead of, okay,
Yeah.
I'm presenting just some analyses that
Yeah.
doesn't really translate into a outcome.
yeah. Yeah. Or like we're into like because we're going sort of a more of a general life topic
Right.
in a little bit. Think about like, if we watch Stephen Curry play basketball, are we watching through a ball going through the hoop? If that's the case, technically we might not have that robot yet. But let's say if I have something that can make every shot go swoosh, we watch that. Do we watch for the sweats coming down from his face with really good cameras that NBA uses, or do we watch for the team chemistry, the camaraderie, or the competition, or because we play as a kid? That product obviously has this. It's not interrupted by Gen AI at all, right?
Yeah.
At least for now. Like that product as a billion-dollar industry for the National Basketball Association that's around the globe, that has its appeal and its product marketplace. What would that? There is a middle layer there. That's not just the outcome, but also the product. But obviously, it's entertainment driven, right?
Yeah.
For businesses, for things that produce, if we need to have an outcome, besides the outcome, what else is embedded in there? I think that's a
Right.
good question for people to think about.
For sure,
Yeah.
for sure. And but I mean, if we were talking about content, I'm not an expert on this, but in the content businesses, right? If AI was able to what is the outcome in the content business? It's the content you consume. If AI is just being able to generate the outcome, then a lot of the value add becomes, okay, what content that you can do that AI cannot? And that becomes a $1 million question, right? What entertainment form that people will still stick to? Like imagine it's probably already happening. All the content you're consuming on these media platforms right now are generated by AI. And probably in the future, even the gaming that you will have are AI enabled as well. And then what are the difference maker? Right? What type of new things? And sports is one of them.
Yep.
Right? Sports is new, exciting, it's live.
Yep.
AI can mimic a game, but would you care about
Yep.
if AI mimic the game, the generated game as much? No,
Yep.
you wouldn't. You want to see things happening in real time.
Yep.
So what are the difference maker from the content that you're producing right now versus what AI can generate?
Yep.
Right.
Yeah. And that leads to adaptation as the root of all progress.
Yeah.
So also adaptation is a form of probably the highest intelligence, right? The adapting with new tools being available. And human beings will always look at Homo sapiens history, right? Through *Sapien*, the book *Sapien* by Yuval and things like that, that we've always sort of created tools. And how we adapt those tools, the Charles Darwin quote is, throughout history, is not the smartest nor the strongest that survived species. It's always the most adaptable species that survives, right? So how to adapt with it for any business, I think it's a challenge. But I do think intuitions need to be built throughout through groundwork and how that goes. So.
Yeah.
Yeah.
I'll start you back on the shorting side. A lot of businesses fail to evolve, and those businesses go out of business.
Yeah. So that's a good. I actually think this whole wave of AI is going to benefit a lot of companies, but this wave actually going to create a lot of dislocations to create more shorting opportunities than, let's say, the market maybe the last 10, 15 years.
100%. I mean, if you really see it, like internet companies disrupt a lot of businesses too.
Yeah.
Right. Every technological advance is going to create a lot of losing companies because you're not able to integrate the new wave of productivity boost, and you fail to compete with those new businesses who are native to the technology.
There will be winners and losers. Losers might be big time losers, just like winners
100%.
might be big time winners, right? So the big time losers on the short side
Yeah.
can be very well written as a thesis and
And you
applicable.
see those in AI businesses already. For example, a lot of voice agent companies are just losing, right? And their stock price has been tanking because what is the value creation in having a live agent taking up your customer complaint call
Yeah.
versus an AI who can answer your question,
Yeah.
right?
Yeah.
Through tokens,
Yeah.
right? And the cost structure has permanently changed. And you just cannot compete from cost perspective using human beings. And human beings will only get more and more expensive, hopefully, because of the inflation, right?
Yeah, yeah.
And even if they are in different markets than US, like in the international markets, they will get more and more expensive. And AI is only getting more and more cheap. And you have more electricity coming online. You have better algorithm. You have more powerful chips.
Yep.
The tokens doesn't cost as much.
Yep.
So there are a lot of businesses who are already AI losers.
Yeah, that's right.
Per se, and I think a lot of short sellers have taken advantage of those opportunities too.
Yeah. And to wrap up our business conversation, do you mind telling us, since you mentioned electricity,
Yeah.
do you mind telling us about your family business to as much as you can share and discuss
Sure.
how you see electricity? And we talked about the ICR yesterday, the stock before,
yeah.
and how electricity market and things like that.
Yeah.
You have a sort of know-how, obviously growing up around it with the intuition and things like that.
Right. Well, we're a cable manufacturer based in China.
Yeah.
And we sell electric cables,
Yeah.
copper in the middle and installation on us outside. So it kind of made me interested in more industrial stuff too. And this name that I worked on, Vicor, is a converter manufacturer based in Massachusetts. And I do think that there is a limitation, as probably many people have talked about, is there is a limitation of how much electricity that will come online in the US. And because of the grid capacity, because how much gas turbine, because of how
Being
how
backlogged,
far away,
being backlogged. Yep.
how much SMR that may be able to come online.
Yep.
And Bloom Energy is one of those alternative energy source provider. They estimate that probably 55 gigawatts
Yep.
of data centers have secured the electricity source. And if we really lay that out, that's probably 11 gigawatts per year. And I think in 2025, we'll have 11.3 gigawatts coming online. So that's a reasonable estimate. I feel like 11 gigawatts per year. And that's the most visible constraint on how much data center can come online. There are also other constraints, but that kind of provide a cap on where this data center related businesses can go and how much of the additional market they can grow. And with that in mind, you can see a lot of unreasonable growth projections within the industry, right? If you're just projecting a business is going to grow 30% because it got AI businesses, then you really have to boil it down to what does that mean in terms of how much chips it's making, how many converters it's making, how many data racks it's making, and with that you could kind of triangulate whether that assumption makes sense. Market is a funny thing. If you just go backward from where the price is indicating, you'll see some funny assumptions in the market before. For example, I think for like, what's a good example for that? What are those shoes called again? The ugly ass shoes that was holes in them.
The bear, you talking about? Yeah, I know what you're talking about.
Yeah.
Crocs.
Crocs, yeah. I remember
they were hot for a while, and just
Right.
Bieber wore them. Yeah,
exactly.
Crocs. Yeah.
There's a huge period of euphoria with Crocs.
Yeah,
Right?
speaking of that, I think we play a bunch of kids in Seattle. Remember?
Yeah.
Adele. I mean, this is
They're good.
What?
They're good in Crocs.
Remember that?
They put the sports mode on.
Yeah, we play basketball with a
Yeah,
bunch of kids
and
in
burn
Bellevue,
ice.
Washington, in
Yeah,
Seattle,
yeah.
with Crocs on.
Yeah.
And,
And-
we had to give them a 5-wing or whatever. We swept them.
Right.
A game because they were playing us in Crocs.
Yeah, exactly.
Yeah, we were in proper shoes. Yeah.
Right.
Anyhow.
And if you really break it down,
Yeah.
like, okay, how many shoes are they selling? How many? Does that mean how many shoes per person have to buy each year in the U.S., in the world? And then I think at a point the market is projecting that everybody has to buy 2 pairs of Crocs every year, and that is in counting the global market. And that's just not reasonable assumption, right? Like you're projecting that everybody's gonna buy 2 pairs of.
Oh,
Crocs
Justin
every year?
Bieber might have. My guy Justin Bieber might have a 20, but
Right.
you can
But
average number
on
out there.
average,
That's right.
that number would just become
see.
nonsensical.
Yeah, yeah, yeah.
Right.
Yeah.
And once markets start doing that, you'll see a great short opportunity in that sense.
Yeah.
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 And to me, there are some opportunities in AI right now because of the constraint of electricity,
Electricity, yep.
and probably other logistics that you can do more channel checks about that are a little bit frothy.
Yeah. And the electricity company you're talking about is in Massachusetts. I'm surprised you were shorting a Boston company. But,
Oh well,
that's a
it's
little
in
unfortunate.
Andover.
Yeah.
Yeah.
Close enough. Yeah.
Yeah, to me, I think that business is very different in terms of industry structure because it's using its own manufacturing process. It has its own fab,
Yep.
and all the competitors are using a different spec. And if you are trying to be unique in a commodity business, you are naturally at a disadvantageous position. If you're serving,
I want people to remember that. So from a manufacturer background,
Yeah.
growing up seeing the family business,
Right.
you think for trying to be unique, having differentiation, or especially unique, let's
Yeah,
say,
yeah.
to be stylish
Yeah.
in a commodity business, you think that's a wrong approach.
Yeah.
Why? Yeah. That's
For example,
great point. Okay.
your end customer, whether that's an OEM or a data center,
Yep.
you would want your vendors to be able to be compatible. So if something goes wrong, you'll always have a backup opportunity to go to. So if I adopt your product that's unique and you have one factory, so what if there's say a snow blizzard in Massachusetts and then your factory has to close down for like 2 weeks? What happens to me, right? As from a customer standpoint, you're not going to single source anything that's in commodity space. You want to be able to have multiple sources where you have the backup and the backup of the backup to have that anti-fragile supply chain. I think that's just built in from a customer standpoint that being too unique. Well, of course, if you can change the industry standard because how well positioned your products are, how much more efficient, how much better your product is.
Maybe like an electric car, Model 3 type of thing. Yeah.
Right. If you drive the entire industry towards your understanding and you are the industry standard establisher, then that's a different story.
Yeah.
But you're marginally better, but you make your process 10 times more complex.
This is great. I was going to close the business segment, but this leads to another further. We should indulge on this. I think it's important to think about probably the 2C end changes. If you are able to be a disruptor to create a new industry or existing industry, i.e. iPhone, in an industry, people have phones for a while. Nokia, Blueberries, it wasn't a new thing. But because the end consumer, that's why I've always sort of, if you will, sort of favored consumer businesses over 2B businesses. 2B business is one you sort of industry know how to understand it, underwrite the process, especially go for a concentrated, big, long position. But most importantly is the 2C end has arguably sort of more of a sticky, because consumers don't always buy for cost per se. Consumers, is the iPhone cheaper than the next Xiaomi or LG or whatever? Like, it's not. Consumers don't always buy for, or there must be electric cars, cheaper electric cars out there that are currently available at a dealership than Teslas and things like that. But Netflix is definitely not the cheapest streaming service, no way, right? So there's things that are half the price, but why people would subscribe to Netflix, right? So Squid Game or whatever other things. But the point is, I think when the consumer end changes in the industry, then you change your standard on the back end. Then people convert to your standard because this is the new way now, right? So movies is not new. Right, watching content online probably not even new. Before Netflix came along, right? People as kids we pirated movies and have things like that all the time, right? Or music is not new, right? You torrent. I remember using that to try to get a pirated music back in high school days in my dorm and things like that. Then Spotify came along and things like that. So once the consumer end changes, so I'll give you 4 examples here: Spotify in music, Netflix in streaming, long form content, scripted content, and then Apple in smartphones versus Blueberries and Nokia, and this is sort of, if you will, sort of our pure value, at least my sort of special sauce the last 9 years. I look hard at the product side, and then Apple changes the smartphone industry, and then you have Tesla changing electric car industry. Then of course I'm manufacturing to is this battery going to be the standard for Tesla? Is this door jam all the entirety of that mechanical engineering design process now converted to the new standard because the consumer has been taken into that ecosystem, right? So. Absolutely. In that case, what you were saying is, if the end consumer, basically they just want to put racks on, they just want to put electricity out, they want to put gigawatts online, right? And if the end consumer is not revolutionary changing, or let's say this particular player in the value chain is not revolutionizing the end consumer output, the 2C business, then the 2B end doesn't change as much.
No.
Because you can't make them to be the unique, I'm going to be the unique standard.
Right.
And then, but if you can change the consumer side,
Right.
then that's all she wrote.
Right.
So
you
that's quite
can't
interesting.
just be like, hey, everybody, we're gonna do square wheels now,
Yep.
and everybody do square wheels. Like, no,
Mm-hmm,
right? Well, how is it better?
Yep,
Right?
yep.
So I just think to B business is slightly different from that, and then to C there
Yep.
are the customer captivity
Yep.
that are different from cost standpoint.
yep,
Right.
yep.
But if you really think about to C businesses, the biggest customer captivity of one of the biggest
Yeah.
from the history is still cost, right?
yeah.
And think Costco,
Yeah,
right?
yeah.
The cost is cheap,
Yeah,
right? And
yeah,
you have
yeah.
your membership, you got a lot of savings, and customers are still captivated by the low cost.
Of course,
But in
yeah.
consumer space, there is a concept of brand value,
Of course.
and franchise value.
Yeah, and the quality you get.
Exactly.
And quality you get.
Yep.
So if you pay $1,000 for something that never breaks for 10 years versus paying something for $100 that breaks twice a year,
Yep.
actually paying more is the quality
Exactly.
aspect, right?
Yep.
So
Yep.
if Costco food always, the famous chicken, all the other stuff,
Yep.
always make you sick, and it's like, of course we have a different
Exactly.
ballgame, right?
Yeah.
So
Yeah.
with that, and membership value and those type of things. That's right.
100%.
That's
Yeah.
right.
Yeah.
So this brings to the sort of, as we close on this investment segment, I think it's the we see it a lot often in Mandarin Chinese sort of 认知变现. That's the
Yeah.
idea of investing. I think it's really insight leads to outcome,
Right.
and insight comes from that 3-layer of the information, knowledge, wisdom thing. Right?
Right.
Information comes in every day. So your job probably, as a portfolio manager, analyst, whatever it is, you probably have to dissect a lot of. It doesn't matter if you're private equity or private markets or public equity. You have to read a lot of information, have information come in, process that. AI can probably automate it, do a lot of things now. Then become knowledge generally has a little bit longer perishable life. Last 3, 5, 10 years, one has to adapt and always keep learning. And maybe another decade, the knowledge we have now are different, and we need to sort of update that. But then there's wisdom. Wisdom is generally timeless, right?
Right.
So the wisdom piece of that insight turning into investment ideas, turning into alpha, i.e., superior returns. It's going to be there if one has insight, right?
Right.
Because this is sort of talking, more on the long side of those long-term compounders. There's more than one person that saw Netflix was going to be this big in 2011, 2013, when Orange is the New Black and House of Cards came out,
Right.
That's a 10-year compounder. Just understanding how the game changed. Boom. That's all. Pure Value started with that Tesla position in 2018, right? Without that, there's no 12x return in 1 year.
Right.
Understanding how electrical car industry is going to change, then things change, right? So. Or it's only the modes, right? For example, like the modes of Tencent, WeChat in the Chinese social media space, and the modes of Instagram, so forth, in the Western Hemisphere, if you will, and globally. So I think understanding these things deeply, it's often what's not to be said that counts the most.
Yeah.
That's that Albert Einstein quote of not everything counted counts, and not everything not everything that counts can be counted. That's I think more and more so the qualitative nature of it, in my opinion, if you will, outweigh a lot of the quantitative things. Because quantitative things, everybody gets the same numbers. Everybody can run similar models. So, but how we understand those changes qualitatively. That's like, let's say for me, for like a better word, or maybe very superficial understanding what you're saying is that the key thing in the VICR short is they have a unique, at least they're trying to have a unique approach in a commodity business that their customers long-term probably won't stick to their standards. And because of all the other constraints, anti-fragile and defensibility and those things, right? So that, to me, is the core of this VICR short, that they can't last in this industry, that if they're going to have this unique standard and with much bigger players facing, and obviously, even though they went up because the electricity demand is anticipated to be up over the years because of AI and US sort of under providing this electricity infrastructure, this aging electrical grid, right? That's a whole different conversation. But in this particular case, that's what's driven the core of the problem.
Right.
And with that alone, obviously quantitative has to check out short interest flows and all the others, and is it doable items, and then what's the financial like, and can the CEO like sort of take a private whatever, get a file evaluation, all the other things that be taken into consideration. But that's the core of the idea.
Right.
And I think for those who aspire to be, if they want to be great investors and things like that, if you can't get to the inside, the core, if you can't basically, Lynch talk about this, if you can't explain your idea to a 3-year-old within 2 sentences, then you probably don't have a thesis.
Yeah.
So that's the sort of the core things. So,
Agree. Yeah, and I just added a little bit to the color of it because
Yeah.
that's when the quantitative side kick in. Right?
Yeah.
Why is it good short? Why is it good timing?
Yep.
Because it's the valuation
That's
is
right.
out of whack right now. People are baking into the expectation this business is gonna grow.
Yep, that's right.
And they also expect there's a royalty business going on, and I'm not from an electric engineering background, so I have
Yep.
to do a lot of channel checks
Yep.
and expert calls that from my network. Utilizing those help you to get a better understanding of their IP business, whether they can license it or get enough IP licensing revenue as the management say they would.
Yep.
And my opinion is that they probably can't, given that in the recent pulled forward IP revenue in
Yep.
the recent quarter,
Yep.
the annualized rate should be a lot lower.
Yep.
And with that understanding, if you're expecting that to grow to where the street expects it to grow,
Yep.
that's a kind of a unrealizable growth rate.
Yep.
And from that understanding, you will see the quantitative side ties into the qualitative side.
Yep.
Right? It's a
Yep.
marriage of both that makes a good thesis, that make good investment opportunity.
Awesome. Michael, we'll dive into personal and maybe life. Dare we say life advice for people who have similar situations or around our age or whatever, so forth. Thank you for this investment discussion.
That's great.
Hopefully, you add a lot of value to Pure Value Capital. If we add any, but if we don't, you added all the value already. So I appreciate you for being here and that. Understanding and the concepts of on the short side, but nevertheless, there's this sort of timeless wisdom that sits across understanding things as they are,
Right.
regarding in business or in life, the fundamentals of things. That's what people
Yeah.
call fundamental investing. because
Also, add a
very
disclaimer:
helpful.
none of that constitute as investment advice.
Yep. Yeah, we'll put
It was
disclosure
just
there.
my personal research.
Yep.
I'm just like sharing my research with everyone, and hopefully that's of some value to
Yep.
people. That could be a little bit inspiring.
Yep.
And and now I've only been doing this for 11 months, so
Yep.
don't take everything I saw. Take everything I said with a grain of salt, please.
Absolutely. Take everything he says with a grain of salt. Take everything I say as the source of truth. And I represent everything that Columbia University, no, I'm just kidding. That represents, and no, I do not represent even the opinion of Pure Value Capital, nor these things are our investment positions. But great conversation. And then we'll take a quick break and dive it back into business and stuff.
Okay.
And well, life. That's
All right, we're back.
Yep, we'll be back. All right. Michael Wang.
Yes, sir.
Welcome to Pure Value Podcast.
sir.
As we talk about this sort of life and the movie, we started with our professional journey, investment career, and sort of the detailed investment analysis. But we bonded as personal friends first.
Yes.
So if you would indulge the audience or me to refresh me that how we met, that beautiful Hawaii trip, and
Yeah.
then there's some of your memories, and then that's a good way to start us off on how lifetime friendships are valuable. And I think hopefully to be lifetime friendships valuable. And I think especially in adulthood, adult friendships are much harder than when you were in your teenage eras or in college or around your peers all the time, things like that.
Right.
So if you can indulge us with a story, that would be great.
Yeah, man. Whew.
Because you're a better storyteller than me.
Well, I think gotta roll back the memory lane, and we were coming to 2020 winter, and that was in Hawaii, the beautiful Hawaii Islands, and
Maui, yep.
Maui, before it was burned. Sorry.
Yeah.
And I think at that moment, there are some defining moments in our relationships, and I like to. I've probably told many of our friends too about this moment. Is that Haxi took us out for surfing for the first time ever, and I didn't know what I was doing. Big surfing fan nowadays, but back then I didn't know what I was doing.
Yep.
So
Yep.
we have to paddle out and across, and then to catch the wave there. And when I was paddling back, I didn't know I was stuck in an impact zone. And then there's a wave that got me into the reefs. And lo and behold, that's a pretty precarious situation I was in. I was holding on to the reefs. They're really sharp, that could cut you, and I didn't know where to go. And at that moment, Robert rushed over and in a shiny yellow underwear. It was like,
My beautiful swim trunks.
yes,
Yeah.
yes, a true Baywatch style, like going that way, go that way. And that's what I did. Flipped the board over and then jumped over and then just start paddling back. And then when I was walking down shore, of course, I was just startled and found out it's extremely painful to walk. And then only to realize that there are dozens of sea urchin spines at the bottom of my foot. And yeah, just literally in pain. And that was Christmas Eve, I think, or the night before Christmas Eve. And Robert, Haxi, and Jingwen drove me to the emergency room where we had the doctor to check it out.
Yeah.
And that was the moment I knew, that was the pivotal night, that this guy is going to be my friend for life. And I remember another distinct moment that we had was with a spot barbecue. And you asked me the question, like, why are we friends?
Yeah, I remember that.
Right?
Yeah.
And I thought about it, and the true reason I kept coming back, I live in New York, I do a quarterly visit to San Diego. Why do I do that? Why do I feel like imperative to travel across the country so frequently? I think I always feel inspired around you, and that's the true reason that kept me coming back.
I appreciate it.
Yeah. So.
That's off she wrote. Yeah.
Yes, sir.
Yeah. I mean, there was some. First of all, there was a funny when we first met with the Hawaii. I think we took a train from the airport, from Maui Airport.
Yeah.
To the Airbnb that we were renting at the time, right?
Yeah.
And then I think I found some bars that was able to hang on to. I was doing pull-ups.
Oh yeah, 100%.
On the
Both you and Haxi were doing pull-ups.
Yeah, I might be the one who started off this idea of grabbing and
Probably
hanging
you.
onto a train, well, inside the train.
Yeah.
And then I can put my hands up and doing that. And I remember
probably you did.
you were in a Hawaiian shirt, and then we met. That was a good moment.
Yeah.
The other ones, I think I think it was because it was during COVID. So I think we weren't allowed to be in the hospital actually to check on you.
Yeah.
But we brought you to the hospital
Yeah.
to look at your foot, and it looks pretty dangerous at the time.
Yeah.
It looks pretty dangerous, and then it was. I don't think you were walking right.
No.
And I don't think it was some or infection or things like that. We didn't know.
Yeah.
But I think we brought you down to the hospital, and then in Hawaii, and it was COVID. So obviously masks was on, and
Yeah.
then but even before we entered the islands, we had to get the vaccination
Yes.
records before we enter, right?
Yep.
So it was the most. This is winter of 2020 before
yeah.
sort of vaccine, Moderna,
Yeah.
mRNA stuff came out. So there's no sort of no way to prove that if you have COVID or not. So we have all the records with us. We're going there, and hospital still. I think only you were accepted. We're waiting outside or something
Yeah,
like that.
yeah.
So that's where we became friends, and
Yeah.
it took a while to sort of get that situation sorted, and then that was an interesting trip. How we met, and then
yeah.
and then events forward, and then obviously there were. I think the biggest moment for me was probably this 2021 summer in Seattle, that we were playing basketball outdoors. For the hoops fans, like if you play basketball outdoors, it's really like concrete ground. You're hustling, and then if you fall, you get serious cuts, or if not, like injuries. And you were diving on the ground for balls. You were the best defensive player still, to me, that I've ever played on any team I played on. Best defensive player. Guards 1 through 5, point guards to center. A combination of like Kevin Garnett and Draymond Green, if you will. Like to me,
Oh,
and Drew Holiday. That's like you guard everybody. And it was offensively, you have the Sengun moves, the baby hooks. So one of the best teammates I ever played with. And then from that, I saw your competitive nature, right?
Yeah.
What it takes to win, and then all the things. So I think, would you say friendship is something that over your life, again, this is sort of a two-part thought question, if you will, like over your life, would you look at how your relationship, because you're a great people person, and you are a people person first of all, and you're a great people person. Yeah. So now, would you say throughout your life, you see how the dynamic between interpersonal relationships change over time? What are the things that stood out to you? Are the things that would fortify a relationship, or are the things that would break relationships over time?
All right.
You can give any family, friends, close relationship, romantic ones, whatever it is.
Right.
that you're happy to shine light on, or even acquaintances who eventually become really close friends, or close friends who eventually become acquaintances, right?
Right,
These distance, how that change, what fortified relationship and what sort of make relationship go distant over time that you see.
Right,
Yeah,
right.
you can pick either one, the pros and cons, and what you've seen.
Yeah, and I do think a good relationship first of all, you define what a good relationship to you is, right? And a good relationship really originates from a good relationship with yourself. And I think over time, I have changed the relationship with myself. I think there are a lot of work that I have done that I have put into understanding who I am and what I want in life. And figuring out that step is already a big factor in the changing relationships in your life, whether who you choose to be closer, who you choose to be distant. And from the other end, that there are things that will give either a push or a pull on a relationship. For example, commitment, right?
Yep,
You,
yep,
you
yep.
need commitment in a relationship.
Yep,
You
yep.
need maintenance.
Yeah,
No
you
matter how
flew to San Diego 4 times a year.
Exactly. You need that. You need in-person time, and no amount of Zoom call is going to change the fact, the dynamic, the chemicals that you have just spending time physically together.
70% of human communication is nonverbal.
100%. And I think just from the other people's end, those are what I'm looking for, right? And are you committed to being friend? Are you putting in the time? And are you prioritizing our relationship? And I think those are really important. And again, there are also other things in a relationship that the other party can or will offer. For example, there are good friends versus bad friends. Right? The company that you have around you really important, and you should set a curated environment where you should feel like you're growing and being inspired all the time, relative to an environment where you're engaged in activities that are not conducive to your growth. So I think those are some of the components when I look at relationships. That is from my end.
Yeah. So, for example, like the activities that certain friends you end up doing with them, that if the activity itself is not something you want to associate yourself with anymore, or practice anymore, it's not. Sometimes not even about people, right? It might just be about the activity.
Yeah.
Right? But let's say if you're into you want to play sports to build a bond with your teammates, or to work out together, or live healthy life, or whatever, then that, or travel together, right? We've done a few road trips together. Those were great bonding moments, right?
Great.
Miami and twice, right? Boston with the championship win,
Yep.
that weekend stuff. So that's the things you want to do, right? And doing with the right person, those are extremely builds, right? Let's say if something, I see, that makes a lot of sense. For something people don't want to do, and then, if that group of friends always bring them to do those things,
Right.
that might not be conducive to the growth, right?
Yeah.
So
and I think that's why first and foremost you got to figure out what the relationship with yourself. Right? I think we touched upon this yesterday, right? Like what type of relationship do you have with yourself? And first of all, you can't be lying to yourself, right? In order to please others, and you're lying to yourself. Okay, I'm in a good situation, or I like this, is one of the worst things you could do to yourself.
self-awareness.
Self-awareness, being honest to yourself, being true to yourself, knowing what you like and didn't like. And there are times where you think other things that might make you happy, but over the longer term, you realize that not really making you happy. Right? There are a lot of instant gratification out there that are not lasting happiness. They are short-term boosts.
Momentary pleasure. That's what we call it.
Exactly.
Momentary pleasure. Yeah.
Short-term boosts that will contribute to a heavy withdrawal effect, that you're just less happy in the long term because of this thing. And in that circumstance, it might as well not to do that thing, right? Whether that's yourself or with a group of friends. And if the group of friends insist on doing that, then you may want to reconsider, okay, what's the relationship with them? So I think being honest with yourself and having that relationship with yourself is really important. And then we talked about this as well. It's like you can also have a mentorship relationship with yourself, right?
Yeah, that's right.
Like giving yourself advice.
Yep.
Right?
Yep.
What advice would you give to others? Give that advice to yourself and live to that. And also you're also yourself best friend.
Yeah.
Right? Support yourself.
Yep.
Treat yourself like how you treat your best friend. Right? Really support yourself. And you're also yourself's hardest critic sometimes.
Yeah,
Right?
absolutely. Yeah, because we know our mistakes,
Yeah.
whether we choose to look at them or not. But we know our
Exactly.
mistakes. Yeah,
But also we can be too harsh on ourselves.
absolutely.
So things you wouldn't say to others, don't say that to yourself. Right? I know plenty of people who are just looking in the mirror and be like, you're a piece of shit today. Right? Try not to do that. Right? Know that you do mess up sometimes. Everybody does. But give yourself some of the opportunity to accept yourself fully. Right? You're a human being, you make mistakes, you also have a chance at greatness, but that's a choice. You may not achieve it every day, but over the longer term, if you choose to do great things, then you are infinitely close to greatness. And also, greatness is from your eye, too. It's from the eyes of the beholder. And if you really like that, if you respect yourself,
Yep.
that's all that matters, right?
Yep.
We talked about this
Yep.
offline sometimes, and I think
All
it's
the
a
time.
good opportunity to bring that
Absolutely.
in front of the camera.
Yeah, beneficial to a lot of people,
Yeah.
hopefully. And this idea of you define your greatness or you define your happiness in the sense where I think a lot, we talk about this, I think a lot about how people sort of having to think about a framework that you have to pick and choose between success and happiness. It doesn't have to be a mutually exclusive thing. You can be happy and you can be successful. So success is sort of this objective thing that people look at from a
Right.
societal standards, and happiness is something how you feel internally, right? So those things can be a beautiful harmony, if you will. It's hard to play that, so you have to find things you love to do,
Right.
find people you love to be around with yourself with. That's the friendship, the relationship component. And over time, through trials and error, people generally try to find that balance, right?
Yeah.
But the late great Steve Jobs, which I mention often, is on this lecture of Stanford. I'm sure most people have seen him in 2007, I believe, after his first diagnosis of pancreatic cancer, and then he didn't know he was going to have another one as well. But during that time, he thought it was cured. But he talked about this: keep looking, don't settle. About this, if you're having something fun, something you love, either to do or be with, keep looking, don't settle, and to stay hungry, stay foolish side, right?
Yep.
So I think a lot of times people take a little bit more knowledge to find that, and what you discussed is this criticism versus cheering yourself up, to sort of having self-awareness of what one is good at, or one's messed up some places, or one needs positive love. That's the ultimate balance between, I think, not only internal self-dialogue management, but also how we deal with loved ones as well, or how we build a team at a company. Is this balance between responsibility and also proper aspirations, if you will. So, like, what are the things that's being done right, that are worth the love and encouragement, and or not there yet, but because it's actually the work ethic or the progress it's good, the process done right, then even the results disappointing, then be like, hey, do it again next time. This year we came second place. Next year we can win the championship, type of thing.
Right.
But but we know we put in the reps and those types. You don't get the result every time, right? In anything. So I think with that, there's this tricky balance that one, if we were to apply that internally, that one must find internally. Say, what are the things I have to hold myself accountable for,
Right.
and what are times it's too harsh, and what are times things I should give myself credit for, but what are the things because of a luck, circumstances, what are things that are circumstantial that maybe you don't give oneself too much credit for, right?
Yeah.
So a lot of this internal dialogue, as one grows, that's a sign of maturity, but also it's going to be helpful for the relationships, like you said, around them too, right?
Yeah.
So then they can have this balanced relationship around with people around them. So some people can serve as the critic in your life, if you will. Some people can serve as the sort of, and those are very precious, right? If people who can sort of put their own social harmony, social status quo in danger to call out somebody's BS and to be that critic, I mean that takes a lot of, gives away a lot of social currency,
Yeah.
and to just for the benefit of the other person's good, right? So that already has then what are the type of people who sort of not being a yes man, but giving true encouraging love, right? So
Yeah.
to differentiate those things does come from one's personal understanding first,
Yeah.
then can apply to all types of relationships.
Yes.
It is, I think, with one's maturity, with time, it's a tricky balance, but I think people can find it. And
Right.
that framework that you mentioned that we talked offline before was this one I picked up from the book 12 Rules of Life by Jordan Peterson. On this was mainly this idea of how one should mentor themselves in a way that you should look at yourself as someone who you're responsible for helping. So if a young man comes to my house and say, hey, I would love to get some advice on this situation. Let's say I broke up with my girlfriend or did this or need a promotion at a job, but then was rejected instead laid off or something. Then we have a conversation about what is happening and then what are the things that are at fault that are caused by that individual or things that individual can improve. Then nevertheless, moving forward, that person is being, obviously somebody is helping that person. So that person is being grateful for the help and then wanting to be create reciprocation and being held accountable for their future behaviors, their future actions, and how to find the balance between success and happiness, those things. Right. So when we look at things through that framework, we can actually go, oh wow, I'm somebody who I'm in charge of helping. So should I, not be on schedule with what I'm trying to help? Should I not go do these things? And then that responsibility and that love creates a relationship as well.
Yeah.
So, great point. That got a lot of our sort of prior consensus out there too. Right. Great. What would you say it's something that if you think about with the relationship you observed around you, can be as long as from a kid to growing up to now, that you see are sometimes people make mistakes on those, or again, long or short, just like our investments. Either way, alpha is alpha. Like inside is inside. Yeah. That either mistakes that people make, or you've seen making, or you can, you're definitely a courageous guy. You admit that you made, or would you see I making, or just observations that people make, or you think that people that's being very underratedly done right. I'd be like, wow, that's something like I know that Robert does or somebody else does. That's incredibly correct. Right. We should pound the table on, do more of those type of thing. What are some things you can think of?
Like in relationships?
Yeah. Any types of relationships?
Yeah. Well, we can start with the positive side. One thing I can think of is just relationship with you and Hexie that benefited me a lot is holding me accountable. Like you need people in your life to hold you accountable, calling out your bullshit, as you said. That a lot of times we're too, as you said, there's a fine balance, right? A lot of times we're not great with finding a balance of being harsh on ourselves or being too lenient. And having a friend out there that give you an objective view, a third-party fair view, is really important. And you will gain a lot of insights from them. And also, sometimes you get stuck within your way of looking at things. And with friends who honestly give you their view, will infinitely enriching your perspectives and helping you tackle things at different angles. Because a lot of times it's not just 1 or 0, that you have to take a turn around to get to the end. It's not if you can do it or not do it this way. It's about maybe you should switch a method to get to where you want to get. So I think that's really important, and having that is underrated for sure. And we don't want to surround ourselves with people just agreeing with you. We want to surround ourselves with people who hold you accountable. I think that's a big part that are missing. And what other things that are positive? You want people who genuinely are comfortable with themselves too, instead of people who are not.
Comfortable in their own skin first.
Comfortable in their own skin. And it just eliminates a lot of the friction in relationships. Yeah. Right? Yeah. If people are truly honest with themselves and comfortable in their own skin, you save a lot of work trying to make the other person comfortable, right? It lowers the communication threshold. Yeah. You can just say what you mean and mean what you say, and instead of, okay, how am I gonna find a way to express my view without a discomfort or without hurting the other person's feeling.
Correct.
Right. So that will
clears the friction for communication too.
Exactly.
Right.
It saves a lot of your mental energy and capacity. So once you have that, life is so much easier.
Yeah, and I'm sure both you and I have this experience as being a people person. Like, I love to socialize and being an extrovert. You are as well. Yeah. Like, there are certain times, whether we choose to care about it or not, we could detect someone in the room that they are, we are sort of, I use this quote, like, if I'm the reflection of somebody else's insecurity, then if I pick that up, there's only 2 choices, right? There's either I cater to that, so I go, he or she might feel insecure about the situation, but I'm just being who I am. Yeah. And then they might feel a certain type of way, so either I cater to that for social harmony, or we don't for the benefit, like say we have to drive conversation to another level. Like say, I have this line from Charlie Munger and Warren Buffett on the average mind talk about other people, sort of the gossip.
Yeah,
Good
yeah.
minds talk about events, and great minds talk about ideas, right?
Yeah.
So if this is a really good like conversation, hangout session, whatever it is, that we're talking about onto greater ideas at that point, then if the prior cordial things were not as comfortable as somebody else's liking, due to their own insecurities, I can sense and I have empathy to,
Right.
but still, for the greater good of driving depth crossed that conversation
Yeah.
to cater to the other people maybe in the room that totally comfortable with that.
Yeah.
Sometimes I push ahead, but obviously the insecure person in the first place will be even more insecure. It might sometimes create jealousy, hate, and other things that comes with human nature. I think that piece is very difficult. And again, I know you would relate to me on this because we read a lot of, we may not call it out, but we read a lot of those rooms being in those situations. What's your best way to deal with that? It's something, I openly admit like all my mistakes all the time because, and again, I don't find it to be a courageous thing because I have a lot of mistakes that, it's like in Chinese, I have a lot of缺点, I have a lot of mistakes. I have a lot of personality faults and traits. So I generally, it's not hard for me to find my own mistakes. They're all over my dictionary.
Right.
So, but how do you sort of deal with that situation? My typical way is that I push through and look for the best ideas and for the greater portion of that room, if you will.
Yeah.
But how would you deal with those in those type of situations? If they're not, so the best case scenario, they're comfortable in their own skin, right? Like we are, and then our close friend circle. But if they're not, how would you proceed? Because obviously we have different style differences there.
Right. Yeah. I'm just gonna borrow a line that you use in Chinese. There's no 优点 or 缺点, 只有特点, right? There's only the unique characteristics that define each person.
Yeah, so the strengths and weaknesses of each person depends on the circumstance they're in, right?
Yeah.
Certain weaknesses or a trait that's less ideal in a scenario, just for the audience, in a scenario, might be a great strength in another scenario.
Exactly.
And certain personality traits that's a strength in a scenario might actually be deficiency in another scenario.
Exactly.
Yep.
Yeah, and you can really change that with your own. If you want to truly authentically express yourself, of course, you want to take in social manners, etiquette into consideration, not purposefully to be rude. But if you're just being yourself, I think that is often the best solution there. And you don't have to change yourself because you want to shape a narrative around people. And also, if you really rub the people the wrong way, right? If people feel like, this guy is a jerk for being yourself, then those are probably not the people you want to hang out with. Right? It acts as like
Self-selection process.
Exactly.
Yep.
Right. People who generally have greatness within themselves may show up as abrupt or show up as other unpalatable things. And if someone who's not able to see through that and get to the core of the greatness, then you don't get to the greater part, right? You gotta love someone for the whole package instead of you pick and choose what's good and what's bad.
And then we talked about this 2 days ago, as through a text exchange across a mutual friend of ours. That led to this question. I want to pick your brain on and hear you're a great people person and share your wisdom with the world. How you look at output, and we know you're extremely competitive as well. That I think for those ones who didn't witness like you on the basketball court and stuff like even in a trivial game that we lose, Michael's always the one that's like, he is genuinely pissed after a game that we lost, regardless if either he performed extremely well, or he performed average, or somebody else didn't perform well. I would just tell you my personal experience is that there are a few times I feel better only because I performed extremely well and I know he was not mad at me. That's the only reason. The other times, if I shot the ball out poorly and I didn't pick up my guy, play horrible defense, and then he put his heart out, got a triple-double, 30 points, 10 rebounds, 18 assists, whatever it is, and 20 steals, which he does, then I know if I shot 1 for 10 from the field, I'm in trouble. So in those scenarios, how do you look at teams? And if you were to, again, co-president of a prominent value investment association, a student club at Columbia University, prestigious school, And also previously, obviously in your life, you being a team leader as well, right? You manage people in your command consulting gig as well before, and you you were part of a band, right?
Yeah.
For your music development back in high school. So, how would you look at it from a not necessarily, I don't want to use the word managerial role, but more of a driving team. So teammates, our definitely teammates, that friends, we get to hang out to do spontaneous fun things for the joy of hobbies and things like that.
Yeah.
Close friends and family, you were together, like you love your mom no matter what, because love was conditional and you love to her, going back it's unconditional.
Right.
That in between that, we're team together here at Pure Value, we're team together at a student club, a student association, try to drive a student outcome, or you team together at a job. How would you look at that? And where is the differentiator in that? And how do you drive excellence across teams, and not only for yourself, but through other people as well?
Right. I'm just gonna borrow this from our class.
Yep.
There are two. I think if you want to drive a team for excellence, there are two ways to do it.
Yep.
One is you lead by example.
Yep.
You're an actor,
Uh-huh.
and you gotta show excellence yourself, right? You show up doing the best you can. You choose greatness every single day. You don't just ask others to do the things that you're not doing, right? So first, lead by example, and second, lead by design, right? There are also mechanism and design to help people perform, including holding people accountable, and also, for example, if a team is not performing well, like I usually think it's my fault, right? Because there are two ways I can do it. Either I'm not showing as an example, or I didn't set up the design. Success is a remnant of the design, right? The system should act in a way that everybody's incentives are aligned, so everybody's driving excellence together. And there are sometimes in organizations that there are pockets of information that's not flowing fluidly as they should, and therefore cause the downfall of certain decision quality. And in that sense, you have to have a better design. And for example,
From a systematic level.
from systematic level.
Good.
And I think any team more than 3 people should have a good design in terms of, okay, who's in charge of what and who has what information. In that sense, because more than 3 people,
Love this, yeah.
people already start not talking. And over communication, you have to do it, right? And if any information is withheld from the decision maker, then without ample information on hand, you just can't make a quality decision.
At the top, you mean? Yeah.
Exactly. So in that sense, I do think the 2 ways to drive it is always monitor and get feedback from the team where the design is failing and where the leading actor is failing. Yeah.
Where the design is failing systematically, and where the leaders are failing.
Yeah.
You think?
Like
Okay.
the action is the leading actor is failing.
The leading actor of that particular item. So it could be the bottom, the junior person, but that leading actor is in charge of that project you're talking about. Doesn't ever always have to be the team captain or the CEO. You mean?
Yeah, I think usually it starts with the CEO, right? And the CEO is the leader of the organization, and he will set example and set systems. And you can't just blame everything from the bottom, because those are essentially should be extensions of your decisions. Right? Your decision directly affect them, and if they're not performing, it's almost your fault, right?
And they say companies eventually like their founder's child, and they take on their personalities in different ways.
Yeah.
Right? Steve Jobs design driven, Elon's material science and basic component driven, and then Tim Cook supply chain driven. So that's apples to arrows different after with Tim Cook carry on the great design from Steve Jobs, but optimize on the supply chain, right? Jeff Bezos customer focus. So all these things that are there, and obviously through sports teams we talk a lot about basketball and things like that. Kobe's leadership style is different than LeBron's, right?
Yeah.
Both work, right? Both won championships. Stephen Curry is different,
Yeah.
right? But having a teammate as a co-leader as well, Draymond Green, that's different.
Yeah.
So you think the true way is probably still to be authentically stick to your leadership style in a way?
Yeah.
You think? Because for example, like Steph Curry can't be Draymond, he just simply can't be Draymond Green, and Draymond Green can only be Draymond Green.
Yeah,
So he can lead with his way. So do you think authenticity matters, or just needs to be like a big tailoring process?
I still think authenticity trumpets a tailored cookie cutter leadership style.
Okay.
If a leader is just not being who or she or he is, and then acting like he or she is someone else, it will get picked up
Over time.
over
Because
time.
you
It
can't.
will.
Yeah.
You just cannot.
You
And
think great
people-
actors can do it for 10 years and acting to be
Right.
somebody else?
Yeah,
No, okay.
people appreciate authenticity, and especially in your leadership, because that's where leadership forms in its unique way. Like, great organizations have different cultures, right? As you just described, Tesla, great organization, different culture than Apple, different from Amazon, but they all follow their founders' authenticity.
Correct.
Right?
Correct.
That's what the uniqueness, and that's what attracts the people you want. Because it's a mutual selection process, right?
Yeah. Yeah. It's a two-way street.
Exactly.
Yeah,
If
yeah.
you are inauthentic yourself, then imagine what type of people you're attracting. If the people are following your front, then you can lead them the way you want to lead them because they're following your front. And then you already have a disadvantage in your setup because your organization is composed of people who don't really follow your ideology. Might as well be authentic and screen out people who don't follow you because they just didn't like your ideology, and then you are left with people
100%.
who really identify with what you're doing.
Which brought me to think about this quote, this line from you that you mentioned to me last time we hung out about a month and a half ago in New York. I asked you this question about a situation that's sort of relating to someone that we both know, and I was talking about basically how do I know if I think I'm socially well versed or have a lot of friends or try to have at least a good amount of social connections in my life, and you as well. Doing that, I was asking, I still want to stick authentic to my true self, and please call me out at the time I asked you if I am being manipulative in situations, because there are situations that I was brought to my alert. I go, okay, is someone being manipulative, right? And then my wife's very harsh on this, and she's strong on people who's being manipulative, and she just sort of gets rid of has this strong dislike on her face. I can see, and then she would just. She wouldn't tell me to get them out of my life, but she would just have this dislike towards them, and then I can see she doesn't want them in her life, let's say. So I asked you that question, and then you said this particularly that I still think about every day, or at least, pretty much every day, that you said. So Robert, for you, your quote was, I think in different situations, if you might, depends on the reading of the room, you might not say everything that's on your mind, or everything about a subject, if the situation, depends on the circumstances and the scenarios, if it's not suitable for the situation. But if somebody asks you about a subject, you would tell them the comprehensive answer and your angle of your take on that particular view. And your view is always consistent with any given subject.
Yeah.
But being manipulative is that when people ask you in different situations, you on the same subject, your answer is different.
Yeah.
That's like I have two more too, but that's one of the top 3 Michael Wang quotes that I would say shapes me, changed my life. I appreciate you, brother. That's how I look at it.
Thank you.
Is that how you look at how sort of authenticity and then help us to understand that framework? Because I asked you out of the blue, and that's that's speaking of AI, that's the stuff that's I can't get it out of Gemini yet. So right? So what makes you give that clear and preciseness, such clarity? And that's the definition of it.
It's pure observation. Right?
Okay.
I just say what I see, and
Yeah.
I didn't expect you to take that quote as
take it to
top
heart.
3, but
Yeah, I'll give you another one. in a
thanks.
second. Yeah.
I would love to hear the rest.
Yeah.
I do think sometimes, because I was being authentically myself, I'm just stating my observations, but I never anticipated what effects it would have. Right? You never know what effects it's going to have on people. Like certain quotes that you have would affect me deeply that you probably didn't notice. I think the same way, and that's leadership, right? You just being yourself, and people who are inspired because they want to be, and people who are impacted because they want to be in a certain way. Instead of, let me curate the narrative around who am I around. And that, in that sense, once you lose that authenticity, you also lose a unique opportunity to offer yourself to the world, to truly interact with the world. You're missing an opportunity to get that feedback too. And once you lose touch of the world, you're also getting detached. Then you don't even know who you are anymore. You know, you lose the most important feedback loop, right?
Yep.
If you interact with the world with authenticity, every time you do it, you got to feedback, whether that's positive or negative.
That's true.
Right?
It helps with self-growth. Yeah.
Exactly. With that chart you have there, right? The
Yep.
1% growth versus 1% decline.
Yep.
And it compounds over time too.
Yep.
Right? So don't rid yourself with the opportunity to truly engage with the world. Because that's going to hurt you in the long run.
So in the long run, being courageous with that actually is a good thing because one gets actual, real valuable feedback. Just like training AI, you get real, data. And if it's right, if it's wrong, and you get better training, then you improve over time.
Yeah.
Versus if one wants to sort of deal, mostly living at least with the external world with more manipulation, then the feedback they got is the character they were acting in.
Yeah,
right?
exactly.
So we all do a little bit acting to a certain extent. Just call life out BS as it is, right? Everybody's a little bit of acting, but I think the generally being genuine it's a good way to go.
Yeah.
Just for growth. It's not even for a manipulative outcome, right?
Yeah. Because that's how you can grow, right? And
Yeah.
Otherwise, you're just, what kind of feedback are you getting? You just treat that as information I don't need and throw it in the trash.
Yeah. That's right. Yeah. And to give
That's not a
people
good way to
another
live life.
awesome Michael Wang quote is do not confuse in the let's say call it in the social media era or in the modern, do not confuse attention with love.
Right.
You dropped this to me
Yes.
in 2024. I think it was on our trip to Boston. We were talking about LeBron and Kobe.
Right.
Man, that hits.
Yeah.
Like when I was in high school, big hoop head. Like I would, LeBron. 2009 when Kobe made it to the finals. LeBron lost to Magic, but anyhow, with JJ Redick and Dwight and the good team, they're supposed to meet. And that 10, 15 years even, the debate has always been who's better, right? So it's compete, Messi, Ronaldo type of thing. And obviously have a little bit age difference, and Kobe sort of retired earlier, and sort of the prime fades off, and when LeBron just picks off. So there's a little bit misalignment timing there. But like I always thought about why did Kobe speak to me more? That there were a lot of times where I go, my explanation was actually a lot more superficial, or at least on the sort of more the first level. I was like, because he was able to work hard and he was able to wake up early, he was able to like do the things. For me, when I was in high school as a teenager, I couldn't do. And he was able to, especially as an introvert, Kobe, he was able to lock in and do the work behind the scenes. Well, eventually, I was able to pick that up, especially in my career, to do the work. Most of the investment work is you set yourself in a quiet room and read all day. Yeah. And I was able to pick it up, and I became successful by doing that. So I'm thankful to it. So that builds the whole thing. What LeBron does was always be able to sort of build relationships across the board, and loves the spotlight and do all these things. At the time, I always thought, I could do those things too. Those things come natural to me. So that's why there's this opposite attracts and similarities. I feel like I can do that too. So it's not a big deal. So there's no idolizing effect. But you called out the main thing, the attention versus love, was that if you get 1 million likes on Instagram or something, like you got people's attention for a brief second. Right. For maybe showing you about it or like whatever it is, that's gotten the attraction or attention, right? Yeah. But for example, every time, I'm sure you relate on this one, I know your relationship with your family, every time I talk to my mom, I know the love is there. Yeah. It's like there's 0 times I question. I tell people, this was during Thanksgiving, when a few of our mutual friends came visit down in Newport, we hung out and stuff. I mean, I was saying there's 3 things that are for sure true. I'll say it in Mandarin, I'll say it in English too. Yeah. Like, the 3 things are for sure true in your life. The unconditional love you get from your family, that's real. If you have the right habits and you have a healthy body, like health gets taken for granted. Brian Johnson has this quote saying, health doesn't matter until it becomes the only thing that matters. So you have a healthy body, and 3 is the knowledge you acquired. Not the resources, not the money, but the knowledge goes you anywhere. So basically I was saying, 学到知识永远不会变的, 跟着你走, you go everywhere you go. This sort of, 无条件爱 from the family, right. And your healthy body. Those 3 things I know are like for sure real. You can touch that. So the love aspect, as you probably generally, Buffett talked about this too, you probably generally can't buy $1 million of love. Mm-hmm. You just can't write a check and be like, receive that. Right. You can get the attention, and people might spend a few minutes that are scrolling time. Right. Hopefully you spend a little, as a long form content platform, hopefully they spend more than a few minutes just scrolling through. Right. But they might spend a few minutes scrolling through it. But the outcome is, it's the attention, they might click like, they might view your story, whatever. But love is something that bonds a lot deeper. And Kobe never in that scenario used right example attention. Don't confuse attention for love.
Yeah.
He never seeked to have a great amount. He was famously notoriously for being an asshole or not or driving to excellence and not care about what's in the way. And definitely did not care about, oh my God, I want to be the biggest. You think he just lost the fight in 2008. He lost the finals with Celtics and went to the Olympics games. First time beating Team USA, want to win back the gold because the USA lost 4 years ago in Athens. And then go to Beijing. You think he cared about like Chinese people and cheering for him in Beijing? Like that was his goal? To be like being cheered by fans? Or was he just focused on, I lost the damn finals and Team USA got bronze 4 years ago. Now I joined a team. I got to win this thing.
Yeah.
But then the love came with it, right? But he arrives at the arena, people love him. So like, what do you think this, I can say, nobody's, a saint in a way. I can say, I can care less about attention in my life or fame, but I do want more love, right? So educate us, in your opinion, how do you buy $1 million of love? How do you sort of earn, how do you, right? Buffett talked about this, right? How do you sort of have more of that in your life, right? How do you earn genuine friendships through time, right? A lot of times, honestly, I do it by intuition, thankful to good parenting and growing up and things like that. But what's the way you systematically look at it from that angle, since that is your quote that stuck with me for a long time?
Right, I think you show this better in examples, right? You show it with your characters, with your authenticity, and to be honest, I think you don't, as you said, you don't buy $1 million of love. Yeah. But you can share a certain amount of love and get the same amount of love back or even more. I think these are the investment in return. Because you invest in love, you love others, and others will love you back. But of course, you have to do it with authenticity, right? You're not gonna go around throw fake love. You gotta be authentically loving people, truly caring about others, and then you will receive that back. As using the example that you just used Kobe, right? Kobe wouldn't tout the money he gave Lamar Odom or taking care of whoever the young players coming in town. Yeah. Right? He just paid a bill. Yeah. He just gave them the money. Yeah. And never talked about it. And that's true love, right? Truly taking care of people. And you're doing it yourself.
Thank you.
Yeah. So honestly, I'm inspired by you, and by observing what you do. Maybe the value add here is that I'm just verbalizing it. Yeah, just verbalizing what I see in you, and you're already doing it.
So you think, actually, it wasn't even think about systematic. So you think the way systematically to look at it is if you want a lot of love in your life, give love out. Yeah. Right. Show love and give love out, and make sure those people who are needed at those situations. You mentioned the examples. Lamar Odom being bankrupt. After sort of substance abuse issues after the Lakers, and Kobe helped him out. Called him and reached out and said, "I'll take care of it, but get your ass back together." The young player, you're talking about Chandler Parsons' story, right? Comes to, I forgot the name of the supper club, signed by Mr. Bryant, right? And then take care of him and want you to have a good time, type of thing, right? Yeah. I see. So just by doing things, and not wanting for the attention side, right? Yeah. Not saying like, yo, look at like my boy Parsons Chandler came to town, like let's like you're saying like. That's fine if you did that. Like there's attention. You think it's not inherently bad, right? Yeah. But love itself has to be. You have to do the action first. Yeah. Right.
Exactly. You're not conflating it with attention, or you're not trying to look a certain way for the general public. Yeah. Love usually are more on these one-off semi-private events, right? Yeah. Yeah. And love doesn't have to be a big gesture either. Like it doesn't have to be like a holiday and then. Grandiose gift,
and people can genuinely feel that.
Exactly.
Like say, not to knock. This is just they're both great athletes and great examples for young people, for people who love the sport. Like LeBron has the I Wish School and stuff. Like, but if you do something, you want to be able to love the education, like to actually want to give up to the kids, right? I'm sure he does. So in that sense, like if one wants to run a charity, if one wants to donate, like you want to be like I want actually help with that cause, right? Yeah. Or the same thing with the platform. Like, sure. Having spread the word out is great. So you have one traction on a platform building. But with my thing, I talk a lot to my internal team about, and I don't know we have formally spoken on this with PR media. One of the goals is that let's just for today's example, and we look at through let's say a narrow lens of racial eye, of two Asian guys sitting down, openly expressively verbalizing things out through other things we see, some professional stuff might be helpful to people who are in certain fields that might be a smaller audience, and this might hopefully to a larger audience about interpersonal things and life and stuff. And then, so that can change an image of saying, I walk on the street with scrubs or something, people might think I'm a great brain surgeon. That's what I think about, right? If you put a navy blue suit on, and people might think you're a great finance person, lawyer, whatever it is. But we are also more than that, and you can speak, and we're expressive, we can be articulate, right? So those things that might, the next kid looking up might be like, oh, I can do that too, right? So I'm doing it. So sure, that attention comes with it, but I'm doing it for the love of the game. First of all, I love the process, but most important for the love of spreading this love of that, Kobe quote on the wall of walk until darkness becomes a memory and you become the sun on the next traveler's horizon, right? So if you're doing it for the love of people that don't even know, but that's building a legacy. Of course, there's a selfish side of it, sure. But I think it's mainly for the love of the game and for love of other people who will come by it. So and that way you think, even attention comes with it, but love is main goal, and one should get love, right?
And what you put out there eventually will come back around to you, right? And the love is the same way. Like attention, as you said, it can be monetizable, and you can also buy attention. But that doesn't translate love. But love can and will translate into attention. But it's a one-way street.
That's right. It's not getting, don't get it twisted, as they say. Don't get the objective changed in that regard. Makes a lot of sense.
Amen.
Yeah, that's right. Anything else? Family values, things that you feel like it's useful for people to dissect and sort of take in throughout their lives, and some things that you see that's being done maybe wrong. As you have a sharp critical mind as well.
I do.
Things we want to call out as well. On this regard, on people's side, human beings are complicated, but it can also be quite simple.
To call out people right now, I hope we are not naming names.
But give scenarios. Or certain behaviors.
I think we touched upon this, is that the ability to take feedback, right? And the coachability part of it is really important to me. And being open to the fact that you are wrong is extremely important, because otherwise you will never be able to correct yourself. And I think that also comes with a certain level of comfort with yourself, because taking negative or constructive feedback is not easy. It's not easy for everybody. And sometimes people take constructive feedback as personal attacks. And then the feelings get in the way. And knowing the fact that these constructive feedback is about, first of all, appreciate the people who give you constructive feedback, because they're trying to help you. They're trying to help you get better.
By sacrificing their social currency.
Exactly. And second, those things are not personal attacks to who you are. It's not saying that you're inadequate. It's saying there are ways you can be better. And I generally think, again, back to the point where you have that growth rate curve, right? If you have that growth rate, and being open to take open feedback is the way to get that growth rate. And if you don't, then unfortunately you will be stuck for a very, very long time in your own way, and your own faulty way, probably. That's one thing that I could think of, I guess, recently coming across people.
And then there's sort of common behaviors you see people when they do it, to being defensive versus being examples of being taken feedback well, and then what type of things that you see people do that sort of is almost too behaviorally become habitual, right? Because a lot of times it's not like, again, people inherently, not generally, at least I hope, they're not generally bad people or evil people, right? It's just generally like they build this defense mechanism, and they're now used to having this, and they sort of having that routine, right, of taking that in. This Thinking Fast and Slow, the book, Daniel Kahneman won Nobel Prize in economics to talk about system 1, system 2 thinking, right? So people just default in system 1, be like, wow, I feel, why are you saying that to me? Like, I'm so, it's whole muscles tighten up, stress system, fight or flight, right? What are you seeing can, either methodologies can, as a leader yourself, can ease people into that, into a better mode, can better tailor that situation? What can leaders do to help with that?
Right. I think for me, what's been helpful, and I don't know if there's a common relief, is that, first of all, awareness is important. like being aware of your mechanism of your reactions. I think there was an assessment that I took that helped you identify in different scenario, especially in distress, what your initial reactions are. There could be anxiety, there could be fear, and there could be anger, right? All those emotions that come with it are different circumstances or certain mechanism within you.
What is the test so people can know?
I actually don't know the name
Okay.
of it. I took it from a class, but I'll look it up and then probably we can offer the link.
Yeah, it's a stress response test, basically.
Right.
Okay.
And in those distress situations, if you feel anger, that probably means you feel your boundaries being violated. Right? That's where anger comes from. You feel it's unfair, and that's anger. And when it's anxiety, that kind of tell you this thing is important to you, right? Like it's really important, so you're anxious about it, and that triggers the importance. And for fear, it's triggers from protection, right? If you're fearful of it, you're trying to protect yourself, and all those things. Being aware of how your mechanism is, that's kind of like the fight, flee, or freeze. Being aware of it can help you being cognizant of what's happening within yourself. And from recognizing and observing that, you have officially entered the system 2 thinking. Instead of the system 1, your amygdala just capture yourself and you're not yourself anymore. And once you regulate yourself into the system 2 thinking, you will be in a better spot, at least. It doesn't say that you will be in a perfect situation where you're taking feedback with no problem, but at least you have a better chance to get a better understanding of what's going on.
And then I think that work has to be done on the recipient end, or you think it's sort of the leader has to almost anticipate that?
So, well, if you are the one that's giving feedback, I suppose there are probably ways to soften the blow a little bit at times. But to a certain extent, because you can't just be able to cater to everybody, and then you have to recognize what everyone's button is. That's a lot of mental capacity, and I don't think someone should or be able to cater to everybody's needs, because everybody's mechanism is different too. So as long as you're giving sincere feedback, don't be overly critical, right? Just stating the fact as it is instead of attacking that person.
Facts-based, not personal.
Exactly. I think you are doing your job, and then the rest is relying upon the receiving end.
So there is the sort of the more mature recipient or recipients who are ready for feedback, ready for growth, and there are some ones you might be, you can lead the horse to the water and they have to drink it themselves type of thing. And if then so be it.
If they can't, they can, and maybe they're not ready for the conversation right now. Also, recognizing there is a time and place for things. So for people, there are times when emotions get the best out of them, but give them some time. They will be able to reason again. Right. So give people the benefit of the doubt and give people space and time to absorb things at their own pace.
Makes sense. And then think the concept that related to this that we discussed, and I showed you the text communication between me and another founder entrepreneurial friend, was this idea of talent density, of treating a team as a team and family, and it's great if culture is built that way and you're going to be a family, but we're team first type of thing, especially at workplaces and in business functions or sports teams trying to win and stuff like that. It's this idea of the best people want to work with the best people. So sometimes not giving creative feedback as a leader actually is letting the whole team down. By catering to one person's needs or certain situation, or letting or let's say if the leader himself is also an excellent IC individual contributor to the team, then in the case of we use analogy in basketball that if Kobe puts in all those work and his teammates are lacking, then one, either if they're still on the team not traded or changed yet, then they he doesn't feel the right to pass him the ball. And it does make sense because he sees the behind the scenes of the habits, right? This exact quote was from one of I think Phil Handy, one of the assistant coaches who worked with on the Lakers at the time, saying like, I mean, later I understood being right. Kobe's name. He's saying like, he sees these people. He's like, man, I coming work at 4 o'clock. I do 3 practices a day. I study film. They come in a minute before practice and leaves a minute right after. Why should I pass them the damn ball, right?
Right.
That analogy of like, that actually, by not holding the team to a certain standard, that talent density gets dropped and people actually don't want to work in the work culture that's not chasing for excellence.
Yeah.
Right. So I think sometimes by letting sort of the personal social harmony, social currency thing in the way at work, at team functions can actually lead to suboptimal results. Not because that person's not taking it well or something like that.
Right.
It's actually mainly because of the other members of the team, or again the leader himself feels like, wow, this is draining energy, and this is lowering our level of standard excellence.
Yep.
Right. So that's a tough. It is a fine line and a tough line to walk, though.
Yes.
I think. Especially, people don't know that until over time. I think, like, after Steve Jobs passed or something, there were so many like posts and blogs and people talk about, I used to work with Steve. He was an a-hole at the time, but like it was also the most productive period of my life.
Right.
This great quote from Warren Buffett is, intensity is the price of excellence. That's right. You go to a grocery store.
Yeah.
You pay intensity, you come out with excellence. It's price, right? Receipt, payment. So that idea of this, of people generally later, they do recall that time being, wow, being his teammates, he drove me to the higher standard of excellence as much as possible. That, I appreciate that.
Yeah.
Right, it was productive. But at the time, it might be hard to take.
Yeah.
So this is sort of, in Chinese, the 苦口良药 being the type of thing.
Yeah.
So might sometimes be harsh advices.
Yeah.
Do you think there's any way around that, or there's just no if and buts BS around it and just go, we gotta hold this shit and we gotta go boom. Otherwise, obviously the outcome is also, like, I use, my wife says I overuse this. I use Navy SEAL example all the time.
Yeah.
I'm like, if you don't hold your teammates to the same standard, people die.
Yeah.
I mean, if you got your platoon squad, you're going to deploy into a mission, like, if you're on a SEAL team, this is not even NBA championship. This is like, you can argue that's entertainment. That's, some people get a paycheck, a high paycheck, and just get paid, and they don't want to win. That's fine.
Yeah.
But this is like people die. So I think, do you think it's scenario dependent, or do you think there's no if and what about it? I think maybe generally you can say in an Navy SEAL scenario, maybe there's there's no if and what about it.
Right.
Although people die if somebody falls behind, right? Or make a mistake that's slacking off, and all the other teammates will suffer because of that.
Yeah.
But do you think there are scenarios that there's a lot of wiggle room? Let's say, like, if I'm wrong, let's say basically push me the other way. Is there any devil's advocate counter argument to that?
I mean,
because I find myself going this way a lot, right?
Right. I mean, sugarcoating doesn't help anybody, right? If you have a constructive feedback that's critical in its core, then give it. And there's no point of sugarcoating it to make it more palatable.
Yeah.
There are certain ways to deliver the message, right? As you said, maybe don't publicly criticize people or shaming people, right?
In group meetings.
In group meetings, and give it a one-on-one, right? But there's no point in sugarcoating the message itself. And of course, you mean well. You want him or her to perform, right? You're not there to destroy that person.
No.
You're there to help them perform better.
Yep.
And as long as people are realizing that, or they will come to that realization. And as long as you mean that, I think that's the way to do it.
Yep.
And of course, there are circumstances how to deliver it.
Yep.
But there's no point of wrapping it in a sugarcoat.
Yeah.
That's
and also, you think a reward system maybe matters? Like, a Jensen quote is Jensen Huang from the CEO of NVIDIA. We can play that video clip. Like, later on, it's that, he's saying, I don't like to fire people. I'd rather just torture them into excellence.
No.
But he used the word torture.
Right.
But again, even mid-level NVIDIA, they become multi-billion millionaires over time, right? Like, the stock options are like granted, or stock grants were maybe 40 grand in the year of 2005. 20 years later, when the kids grow up to go to high school, whatever, those original, middle level managers, stock grants go from $40,000 into like 40 million, right? Because stock like went up 100x, and that torturing to excellence had an excellent result, and these people obviously become financially independent and wealthy, and they're going to do great things, right? And then enjoy the benefit of that. So I'm already kind of sort of playing that both sides, seeing like, okay, because there's the reward that's big, right? Therefore, he tortures me to excellence. Again, that's a direct quote. Like he said, I don't want to fire people. I don't like to fire them. He has 55 direct reports, first of all. It's insane. And he doesn't do one-on-one meetings, by the way.
Yeah.
He said, so this is the one that's sort of counter to the common wisdom as well. Jensen thinks that, as I sit in my leather jacket, try to put his hat that he thinks if you do a one-on-one, you are wasting the opportunity for another person on team to learn. Because you've done a one-on-one, and then if this person made a mistake, right? Typical wisdom is that they feel bad about it, so shouldn't publicize about it. But if the marketing person made a mistake, then the procurement person could have learned. If the legal team made a mistake, the engineering team could have learned because there are similarities across things.
Right.
And then eventually you want a team level synergy.
Yeah.
So 55 direct reports, anybody makes mistakes, everybody knows.
Yeah.
He criticizes them across everybody. Like, what do you think about that? Like,
I mean, Jason is probably one of the best CEO of our generation.
yeah, like the result speaks for it. Yeah.
Absolutely.
Yeah.
And I think you need a bulletproof team to do that. And probably it also takes a lot of process to get there. Right? At first, it's going to be tough for everybody, right?
Yeah.
Nobody likes being publicly criticized.
Yeah.
But if
Yeah.
that's the vision you have,
Yeah.
then you will have the proper roster for that.
Proper roster. I like that.
Exactly.
Yep.
It's
Yep.
roster dependent, right?
Yeah.
Depending on who are on your team, right?
Yeah.
If you have the vision to build that bulletproof team, then do everything accordingly. And the worst part is the disconnection between the roster you have and the approach you have. And then that's a setup for failure. But if you have the proper roster, I mean, there's no right or wrong in this, I think, right? For example, if people who are a little bit more publicly aware and who are more conscious of themselves, but who are equally performing and competent, maybe one-on-ones are good for them.
Yeah. So they're good in their roles. They take feedback well too. They just
Exactly.
really don't like to be
Yeah.
taking a feedback at a 12 people board meeting or
Exactly.
something. They just want one-on-one. But every time you do a one-on-one, they perform
Exactly.
well after.
Yeah.
Then you should tailor. You should. Okay.
Exactly.
Okay.
And also there are pocket of information there that you know how to incentivize people. That it's a learning process for you as a leader too, right? And of course, like if you have a bulletproof team and you do that all the time,
That's the
part.
yeah.
One part about I think my personal opinion, giving
Go.
public feedback
Yeah.
is that you don't get the feedback from the other end. Right? Imagine you're the CEO,
Yeah,
you're
no.
giving critical feedback,
Yeah.
and who is gonna stand up to you?
Tell me the Slack group chats on without the CEO in it
Yes.
and the one within.
Gonna
I know
blow
it's
up.
different. Yeah.
Right?
You know it's different.
Right.
Yeah.
So you have to have a
Even in a group retreat.
Exactly.
If I go to retreat or my team goes to retreat themselves,
Yeah.
as soon as I leave dinner, the conversation is different. Of course.
Yeah, exactly.
Yeah, yeah.
Right. So that could be a downside of what Jensen has. I mean, he probably built a system around that to mitigate that problem, right? And as he said, he doesn't fire people, so people feel safe, right? It's also a guardrail around that. So I don't fire you, so any feedback you have, shoot.
Yeah, to keep performing.
Exactly.
But don't worry about commitment.
Yeah,
I'll always, you gotta be here.
Right, you got a safe environment to be able to do that. So yeah, you have to kind of navigate it around and have that lens on what is suitable, right? There's only suitability. There's no best practice.
Yeah, that's right.
Whatever suits his leadership style, his roster, and his system thinking, then you will have a successful system, right? And you can't just have it in between, then things are gonna fall apart.
Yeah.
Right.
Yeah, that's right. So be consistent throughout
Yeah.
of that too.
Exactly.
So reminds me also, like, Bridgewater in our industry that
Yeah.
Ray Dalio talk about find the smartest people that disagree with you, the concept, right?
Yeah.
So he has internal debate all the time, type of things.
Exactly.
Yeah. But then also at Berkshire, at least looks like from the outside that, Warren Buffett never, Warren and Charlie never had, they said they never had an argument over, 6 decades, 60 years.
Yeah.
If they disagree, they just leave it as it is.
Yeah.
And then and they have a decentralized culture, so there's sort of subordinates or teams, so forth,
Yeah.
don't involve in the core decision making. So they generally, he's very decentralized, let people do their own thing, high trust in them if they're competent to do their own thing. Supposedly, when Ajit Jain runs Geico,
Right.
Ajit just comes to be like, this year, this is how our insurance operation performed.
Yeah.
This is what's our underlying underwriting profit, how much we're taking on the balance sheet.
Yeah.
And then Buffett decides a few things like pricing,
Yeah.
and based on inflation and things like that. And then Ajit goes back to do insurance.
Yeah.
Like he doesn't interfere with how should we design the Geico lizard this way? Should we go like no micromanagement on that side and
Yeah.
just sort of leave people with their full autonomy?
Yeah.
That's also a way of doing things.
Yep.
This one, I would say, my investment career personally, as a portfolio manager has been definitely more, let's say, on the experience side and been doing a lot of that. But as a young CEO or as a leader of people, I think have a lot to learn. Public meetings on that regard, and to which style to go for. I've obviously, as you can tell, read a lot and absorbed a lot of the wisdom that's hopefully timeless. But in application, it's also a very different ballgame. And I feel like I'm in any one first quarter, first 5 minutes in terms of applying that in a game as the jump shots has been practiced. But applying that is how can tell whoever's interested out there, it's a whole different beast.
And again, I think it's great to think of them as a great design problem, right? Because and great designs doesn't come just overnight. It
come from
has
doing,
to-
trying.
Exactly.
Like,
doing, trying, and trial and error.
basically, I feel like I've been practicing jump shot in an empty gym for quite some time. And I think I've swooshed a lot of shots. But once I have a defense in my face, now it feels different, let's just say, on the management side.
You got to keep iterating, right? Find the applicable situations where things you got to fine tune, right?
Just like investing.
Exactly. Jensen probably didn't figure out this on the first day.
No.
Right. It's a long process. And
through 4 almost bankruptcies.
Exactly.
Almost bankruptcy.
But also, I do think that in the talent side, like, there's so much going into developing or grooming a talent into a system. So the cost is so high. And it is a painstaking process to groom anybody into the system too. So
parenting.
Right. And so anybody that goes churn is going to hurt the organization in a way because you already put a lot of resource and energy and time into it. So I do think that lower churn suggests a successful organization, institution. Like,
It's with consistency married to the org, not to the founder himself. Like, for example, Tesla always had high churn, but it feels like a company without Elon can't be run. We might be wrong on that, but like, it changes all the time. Versus Meta, we can pull this. Shout out to Zuck and Chris Cox. This post, I think, it's the most recent, one of the most recent posts on Zuckerberg's IG. So people have obviously very controversial guy, controversial company. Most his senior lieutenants, CTO, CPO, Chief Product Officer, all these people have been there for 22 years. And he's only been around for like 24 years or something. Like, obviously he started young. These people are young, so they're in their like early 40s. They're not old at bending, stretch, and imagination, but like but you look back, they're all been there for like 22 years. Susan Lee, CFO, been there since 2008. Chris Cox posted a photo of them way back then with t-shirts and flip-flops type of thing together. And again, this is not a co-founder relationship. It's just pure employee relationship. But that's lasted. So that's probably just more systematic built in there, right?
Exactly.
So we're saying.
Because that suggests 2 areas of success, right? First is the incoming, the inflow. Like you're doing great hiring decisions. And then second, you're doing great retention.
People get along with each other.
Exactly.
The Warriors organization, the Draymond that one, right? So you can find that. This is good for our conversation, and I think it's good. People can play this is through a hobby that we both share, but we compete through that. And this is kind of find that video. It's awesome. He talks about why would Oklahoma City, the current Thunder team, repeat, and how he thinks about it. It's really good. At that, you watched it before, like I think it's this one, right? We watched it together when you arrived Saturday.
Yes, sir.
Right? And he talks about how here, model of championships, besides just having great players, what's the key to make sure that, I had this video on my mind before the pod even, but this is, it's good to insert here. Look, we have to like each other, right? You can tell they love each other, right? You said it was deep. That leads to all the magic. Understand roles. Right. They definitely understand their roles. You have the top dog, you have the number 2, know their role. Right. So, and then he goes on talking about how there's no changes in terms of even when they're missing people.
Right.
And he goes to talk about this level of excellence. The repeatable excellence. That's his next point, I think. Yep, that's what it's talking about. Being
Yeah.
special to watch.
Yeah.
Very interesting.
Yeah.
I think how that's also on the investment because I'll probably I think learning as a team leader. I have a lot of experience because record speaks for itself with the investment returns. That's why I've always been a proponent of no paper trading. My humble opinion, simulations don't work
Yeah.
in public markets investing. There's nothing like losing a real dollar that's $100
Yeah.
or 10. But losing $1 million on a simulation account that when I had the program, shout out to Berkeley at one of the Hus programs and other programs I've had, they give you $10 million to start trading with.
Yeah.
It doesn't feel like anything because you can gamble it. It's
Right.
almost like casinos. They give you go to like a fake casino, give you fake chips.
Yeah.
But once it's real $1,000, it's real, started PA at $25,000, whatever it is. But each dollar, each amount hurts, each amount changes, right?
Yeah.
So with those situations, you build an intuition, you build a true care for the problem.
Yeah.
And over time, it builds strong, real life, applicable intuition, right? Or that Mike Tyson quote of everybody has a plan until you get punched in the face, right?
Right.
For the fighters who train, right?
Yeah.
So in the leadership application side, I think, I thought I read a lot, in the Chinese world of
Yeah.
万卷书行万里路.
Yeah.
But I think the application side really gave me so much more learnings
Yes.
than the reading aspect of it, And shout out to 3 books too for people interested in management. No Rules Rule by Reed Hastings, High Output Management by Andy Grove, and then there's this obviously the combination of his business thoughts by the management style to invent and wonder. It's an essay collection of Jeff Bezos' writing,
Right.
Amazon letters over the years, and Berkshire Buffett stuff too. So that's interesting because I think that this sort of we talk about the love side, the friends and family side, how to build core relationships, those things, and arguably they're more important than probably objectively trying to accomplish things in life. Sure, but in a team function, that there's more technical things to it. I think.
Yeah.
That lead to success if one wanted.
Yep.
So there are 2 different domains to me. Almost feel like, even though
Yeah.
people are people, but I feel like, I'm definitely not a rookie when it comes to making friends. I think,
Right.
or having a stable long-term relationship, or being, a good son, hopefully to my mother, to my father, stuff like that, or being a good sibling.
Yeah.
Like those things are not new to us. We may not be perfect, but I do feel like running a company, building a team, it's a different beast. Even though you're dealing with people, but because you want out of it, it's different.
Yeah.
So that nuance has to be investigated.
Yeah.
Just because, let's say, you're naturally social, good people person, you can go out there and just have a great team and work, like that might be too naive. If that makes sense?
Yeah. Yeah.
And that's me, admitting that naive part of me as well, and thought, that's just gonna work.
Yeah.
Not necessarily.
Yeah.
So and
That's powerful to admit that too.
oh, absolutely. I mean, you live life naked regardless if you have clothes on or not.
Yeah.
We have this mortality thing that we all
Yeah.
subject to. After we go, everything's gonna be there anyway.
Yeah.
And the people.
Yeah.
I often think about what Buffett talk about this. Write your eulogy what it would be, and live your life backwards.
Yeah.
And what friends and family would say at my funeral would be how I want to live my life anyway.
Yeah, sure.
So there's no hiding. Absolutely.
Yeah.
So that's something. But the good one. But also you get the fit. You get lucky too with times that shout out to Ryan Abar, who's gonna come ask you a few questions
Yeah.
on investment related business things as well. There are great team members. You just talk about roster.
Yeah.
You just find diamond through the rough and find a gem.
Yeah.
And then they've been able to do great things.
Sure.
Yeah.
Yeah. And I mean, having a team is also difficult in terms. I'm gonna borrow the term emergence of complexity. Just the sheer increase of scale.
Yep.
Right. Just the more people you have, you gotta involve more techniques.
Yep.
Right.
Yep.
We can be great friend, great son, great husband within a smaller unit
Yep.
of people that you're dealing with.
Yep.
But once that number of people increase, there have to be systems to be designed.
That's right.
Yeah.
Yeah.
And that has to come with applications, and also finding out what your leadership style is and the guardrails, the whole system around it. And yeah, it is also a super great learning experience for individuals too, because I'm sure through this process you learn more about yourself too.
Yeah, you become
Right.
a better man.
Exactly.
And hopefully in the future, better father,
Yeah.
Better husband, those things.
Yeah.
They come
Yeah.
with it.
Yeah.
Yeah.
It's a growing experience that give you great feedback into looking at yourself truthfully. Okay, what are true downfalls that you did, right? And that's why I said admitting that was powerful, because you were just admitting that the downfall is that you underestimate the complexity of the problem, right? And being able to admitting that is the first step to next stage growth.
Yeah. Because a lot of great investors are, and we mentioned on the first episode, Buffett has an empty calendar type of thing. A lot of great investors have a lot of flexibility, spontaneous nature of how they design their lives, and most important, they're great ICs, as in individual contributors. They're, if we can be, with Picasso's own craft, a building portfolio that can generate returns and can do well, sure. But working with other people, collaborating, is a whole different task.
Yes.
And that comes with different, might need, use the MBTI thing, right? We might need more J, be more organized than the spontaneous, the penis of things, and those type of things. So there are definitely, internally, one has to change and adapt.
Yeah, I mean, borrowing from you again, dealing with things is simple, dealing with people is complex.
I think so. Yeah, I think so. People think, physics is hard. It is hard. But I think sociology also has its own beast because human beings are inherently not logical, and none are we. I think that. And to piggyback on one thing, just to call it out, you just said on systematic design, the incentive structure, those things.
Right.
I think having a system with more people, you're saying generally you need more of a system, and eventually have to automate and have this at least a systematic structure design.
Yeah.
That part is crucial from another point to decision fatigue. Leader, you want to be able to make a few high quality decisions a year, just like a great investor, any entrepreneur, or any artist.
Yeah.
You don't need to produce 20 albums.
No.
You got 2 great songs for within 5 years. You're already trending, that type of thing. So then if you have to make all decisions every day without a system, that is essentially takes your creativity and your focus and your energy away from doing what truly matters. That's some learning I've learned as well over time. If that makes sense.
100%.
Because it takes decision fatigue is real.
Yeah. Another important decision framework in mental framework at peer value is that you have to focus on the things that are important, not urgent, because that takes a lot of frees up your mental capacity, and that's where you should spend the most time. Yep.
And a very, very visual example for interpretation. I probably only do these 2 things I think more frequently enough to call it out. The important, not urgent side, and we'll end on this, I think, on the personal side. It's probably reading and exercising.
Yeah.
There's not a single day you need to go do 25 pull-ups. That's urgent. It's not damn urgent. It's never urgent until health declines.
Yeah.
There's never a single day doing zone 2 cardio. It's urgent.
Right.
But it's important. Or nor there's every single day, and again, Haxi, our great mutual friend, talks about it all the time. Sometimes when he hangs on me, he just go like, Rob, I gotta go home and read more.
Yeah.
He had this during Thanksgiving. He was like, I've been so busy with my sales calls, enterprise, and then talking to customers. I gotta read more.
Yeah.
And I said, I didn't even read much the last month because I've been working on team building and stuff.
Yeah.
He goes, but talking to you made me realize I gotta read more.
Yeah.
I gotta read. He has this facial expression. He's like, I gotta go home. I've been not doing that enough.
Yeah.
But because generally reading through things are like a biography of Michael Bloomberg, say.
Yeah.
Like it's never urgent unless your job is to write a next book. But it's important to. So I think if anything, I got lucky with doing those things frequent enough.
Yes,
to just sometimes I might miss the urgent but not important things such as making to the airport on time, which I have habit of doing.
Yeah. But we both share the same.
That's right. Cool, awesome. This has been great.
Thank you.
Thank you again for coming on. Ryan might have a few questions. Our joint analyst might have some few questions for you on the investment side. If you don't mind giving him some of your time, that'd be great.
Yeah.
And then, man, this is awesome. We gotta do this more often.
Yes, sir.
Thank you for coming in town, flying from New York to do
my
this.
pleasure.
Yeah, and hopefully Newport and Orange County is treating you well enough.
Yeah.
And our friendship half a decade down.
Yeah.
Isn't it crazy?
Yes.
Half a decade.
Yes, sir.
From the Hawaii days.
Yes, sir.
To now. So.
And I can see the next decades to come.
Yeah. I'm proud to call you a friend. Thank you, Mike.
Likewise. Thank you for having me.
Michael, thanks for being here. Ryan, obviously we met earlier, but just to introduce myself while we're on the podcast, I'm the head of operations at Pure Value Capital, and I think Robert and I have a very strong investment analysis when it comes to modern value, thinking and how are we going to develop a strategy that really works. But as we were talking earlier, you said you're a little bit more of a critical person and you find value and overvalued or intrinsically overvalued stocks and then shorting them. And I think that's a very interesting approach. It's something I haven't really looked into as much at a young age, and I think there's a lot of value for people to take some lessons from what you have. Let's jump right into it.
Sure.
So there's often tension between intrinsic value and quality when it comes to stocks. Can you describe some of your thoughts when it comes to when a company might be overvalued, but they have strong fundamentals? Whether that means good management, good earnings, good sustainable, competitive advantages. Tell me about your thoughts when a company is overvalued, but the company is still doing pretty well.
Yeah, well, you can't short those.
Okay.
Yeah, because there are a lot of GARP investors there, right?
Growth at a reasonable price.
Exactly.
Yeah, GARP.
So, for example, a lot of platform companies are often trading at pretty expensive multiples, but they can keep growing their earnings by keep rolling up and acquiring the companies onto their platforms. They're still trading at premium, right? But you can't short those stocks, right? Just
Okay.
pure on valuation side.
Okay. I remember earlier you said something about catalysts and the importance of catalysts in both under intrinsic valued stocks and over intrinsic valued stocks.
Yeah.
Tell me about how catalysts, how you developed the framework for finding catalysts for certain stocks, and then, I guess the time aspect of how far out should those catalysts be in.
So it depends on how your duration as well. How long do you plan to hold the stock? It's usually on the short end, you want it to play out 12 to 18 months. So you want to see a catalyst happening during that time frame. And that catalyst usually come from your observation and understanding of the industry and the business, that something is about to happen to bring the investors come around to your view. Because usually as a short seller, you want to have a variant view relative to, everybody's shorting it, so I'm shorting it, right? So that's on the short side. And on the long side, I think that catalyst, if you're holding the stock for 10 years, maybe catalyst doesn't mean as much to you. You're buying earnings and you're betting on it will increase in 10 years because you're really betting 10 years. It has a sustainable competitive advantage. A lot of businesses lose their edge within 5 years, right?
Okay.
If you're betting it for 10 years, you don't anticipate in a short term a catalyst is going to happen. No one can predict what's down the road in 10 years. But if you want a long, within 18 to 24 months, kind of tiger style investing, then catalyst becomes important. What's gonna bring the street to your view again? And again, I think the framework to think about that is you have a pocket information where you think will go public, where the public's gonna know about it. And that comes from, again, the observation of the business, observation of the industry, and sometimes you will see activists being a catalyst too. If you know activist investors are coming in, or you yourself become an activist investor, you bring your view, you broadcast your view, and you will see some investors doing that as well.
Great. Now, when it comes to, let's say, 12 to 18 months, you put a catalyst out. How can you differentiate between a catalyst that's just really making noise for a specific company or a catalyst that's really a point of inflection that maybe it should be going downwards or upwards?
I guess by nature, a true catalyst should be the inflection point, and if that's noise, that's just noise. It's not a catalyst. But that's arguing on the nomenclature side. And if you have a wrong understanding of a catalyst that ended up just being noise, I think you need to re-underwrite your thesis. Right? Really think about what drills it down to what your thesis considered it as a catalyst and why the street doesn't consider it as a catalyst.
Got it.
Yeah.
And one example too on the changing the thesis side was this applies to both long and short. Was the Q2 20 for people to look at facts and look at that history. Q2 2019, when Tesla's production number go from Bloomberg had a tracker on this, and this is not Bloomberg Terminal. This is just a public like Bloomberg.com. They were producing 20 to 50 cars a week, and they went to 5,000 a week. That was the production held the bottleneck that Elon couldn't produce enough cars. So it wasn't a demand problem, it was a supply problem. So the catalyst would be supply breaks through, demand was there for the company to go robustly, at least meeting their demands and also being somewhat profitable, right? Otherwise they would go bankrupt if you can't produce the things that people want. So if, let's say, at the time I was able to correctly identify that as the right catalyst, if somehow production volume basically 50x'd and revenue picked up as people ordered those, paid for those already, but they finally delivered because the ordering fees were maybe a few $100. When you deliver the vehicle is 50,000, right? So that's actually recognized revenue on the accounting side, right?
Yep.
And when that happens, stock still doesn't move in Q3 in November, especially in November. Now September moved already. November after Q3 earnings report, it moved big time. So it went from this pre-split split adjusted, non-split adjusted in 2019 from $170 Tesla stock per share. So today's equivalent might be like $14 or something. went from 170 to 360 in 5 day trading days. Then just by your definition, positively, that's a positive reinforcement, right? That is a catalyst. If it didn't move, then you go, what am I missing here with the business? Maybe other people, you can still be correct, but other people might just be like, well, is it because the street analysts or people around the business who are looking at it's not a demand, it's not a supply problem, maybe there are other problems down the road there.
Yeah.
But you can still be right. You can wait for the next so-called catalyst for the stock to work.
Right.
But at the time, it just it can be proven that's not a catalyst. If that makes
Right.
sense.
Sure.
Yeah.
Right.
So that's a detailed example there.
Yeah, it's just piggybacking on that. It's really an inflection point about refuting the narrative on the other side. If you're a bear and you see the bull thesis and you see the catalyst is refuting the bull thesis, that's when the street will come to your understanding.
Yeah.
Right. Same. We're using the Tesla example. There's a lot of that coming from the short sellers getting squeezed there because people are seeing it the opposite way now with the new evidence. And then when they shift, and then also Tesla has a thick short interest at the time, so the squeeze is going to help you too.
Yeah. That's correct.
That's great. Now, let's say sometimes the catalyst happens, whether it's management leaving or poor earnings report, and the stock doesn't, react how you would expect it to. Maybe it goes up in value instead. How do you react in that situation as a short seller? Is that something that you should double down in? Is that something that? Tell me about your thoughts of what you would do in that situation, hypothetically.
So if the stock doesn't move in the direction that I want it to be because of certain changes, then usually we have to reassess the situation, right? Is the new, for example, a management change? Who's the new manager, and what is he or she going to do differently than the old manager? Is that going to fundamentally change the business? And if so, then we have to adjust our thesis. But if that doesn't bring change to our fundamental thesis, then the risk reward just got better. That's when you want to double down. But of course, you don't want to get burned because on the sell side, on the short seller side, the loss is infinite. So you really have to be careful there.
Sure.
Yeah.
Let's talk about just short selling as a concept and the mentality behind short selling. It's a little bit interesting to think that people make money when others lose money. And it's kind of a weird concept to think about.
Yeah.
As a young investor, we talk about with Robert game theory, positive sum versus zero sum investing. One thing I want to talk about with the short selling is the idea is that you're skeptical of a narrative not holding up, right? So let me turn it on to you personally. What's a widely held belief that short sellers would think is just complete BS, something that you would disagree with within your own community, but you have obviously a reason to believe so. And why do you think that reason is the case?
Like a well-held belief by the bulls.
Exactly. Yes.
I think now with the AI bubble being in the conversation so much, people are kind of coming around to the belief that AI is reaching a bubble phase, right? So maybe that's not the best example there. I think what short sellers see is a lot of times that management using different tactics to extend the runway for their poor performance showing up. I think that's a commonly held belief on the bull side because you as management have tools to, right, to really decorate your earnings a little bit.
Of course, yeah.
Right, and you can make things work in your favor. For example, you can sell your assets to make the EBIT look good.
Sure.
You can make acquisitions to hide the fact that your business is not growing organically.
Yeah.
Right, and those would fit in the bull's narratives. A lot of people, if you don't dig enough into what's under the hood of the earnings, then you won't realize that. And that's where the variant view comes around. And that's not sustainable. And one day it's going to go bust.
Got it. Now, let's talk about shorting is like a mathematically asymmetric concept, right? So you have unlimited loss, but there's just a limited amount of potential and profit that you can gain out of it. So realistically, let's say your short position catastrophically fails. Right. Again, we talked about how you'd reassess the situation, but let's say in a heartbeat, you're gone. With value investing, what they say is that when a stock comes down and it's intrinsically undervalued, you should buy in again because that's an opportunity for you to kind of dollar cost average. What would be your reaction to you have a short position, your position crashes, you've reassessed, what's the next step basically?
Well, hopefully you don't get that happening because that usually comes with the timing, right?
Sure.
And if the things do come against you, and that's, you put yourself in a really tough position. Of
course.
Permanent capital loss is the worst enemy of investing. You don't want to do that. And if your thesis stays intact, then the risk reward just got better, right? But fewer managers are willing to trust you on that process. If you got burned 50%, oh, that's gonna hurt a lot. But you have to convince yourself, if you have conviction in your thesis, then things will play out. So first of all, it's the conviction. Second of all, you got to protect yourself sometimes, right? And maybe as an institution level, you don't get the liquidity from the option pools, then you may want to think of hedging a little bit, right? Maybe a pair trade.
Sure.
So within the same industry, if you think this stock is performing poorly and the management is poor, then you will short the stock and long industry leader.
Yeah.
So maybe you pair that a little bit when you're less sure of it. But of course, you always want to short the best ideas you have.
Of course.
But when you come down to the 10th best idea in shorts, usually people have 10 to 20 in their names.
Yeah.
And then you may want to get a little bit of a hedging going on.
Got it.
Yeah, some type of pair trades.
And the asymmetric side is really sort of, and Michael and I haven't had this sort of conversation like officially yet, but obviously he got into it, and we're going to eventually have a sort of open dialogue and back and forth on this. I think the asymmetric part, that's where you have to be, one, nature has to be just like personality-wise critical, and then have to be a natural calling to be a short seller. But most importantly, why, and this people can find this on web links, just typing Charlie Munger on short selling or Warren Buffett on short selling, why they don't want to do it. It's because you have to have a stomach to suffer the losses in the sense where when asymmetrical risk reward is against you, right? And again, here we're talking about technicality-wise for technical shorting, right? Just shorting a stock, not buying puts, right? Because technically with execution, there are many, credit default swaps.
Yeah.
So with CDSs and puts, and we're happy to dive into them in the future episodes, things like that, with more technical ones. Like you can obviously make 5x, 50x return from that. But traditional short selling, what you make is 99% generally.
Yeah.
If a stock goes bankrupt, you make 100% of your return, and that's it. Generally, sometimes multiple compression, you make 50%, 20%, those type of things. And what happens is that on the long side, when you suffer losses, when you're wrong, let's say if you have a 10 stock portfolio, if 3 are wrong, or 8 are wrong, the position gets smaller.
Yeah.
The position actually becomes smaller. $1 million portfolio, about 10 stocks, let's just say ABZ, ABC, ABZ, whatever, keep going down, right, stickers. Each position that suffer 50% loss, 100 grand each, that 100 grand goes to 50. The other 100 grand goes to 50. So now those positions are 5% my concern, not 10% my concern anymore,
Yeah.
even though the portfolio went down, right? But on short sides, actually, because they gain, so they become a bigger part of your headache.
Yep.
So in that sense, one has to just deal with this reverse asymmetry
Yep.
of the maximum return is 100. And a lot of times, in the, again, to use examples at Pure Value that we made investments in the past, the asymmetrical risk reward return has been, a 2019 Tesla or a 2022 Meta has been 8x versus down 20%.
Yep.
So that's a 16x asymmetry, right, in those situations. So from those scenarios, I think generally the understanding is we have sort of a situation that even if we were wrong, it's not too bad, right? There is permanent loss of capital, but it's not too bad, right?
Yeah.
But if one is running into the stock can go 10x, and then, right, let's say in the reverse Tesla situation, right? Jing Chanos, right, famous, great short seller, called out Enron, right?
Yeah.
Great track record. But then he lose, his pants on a down 10x scenario.
100%.
Versus the asymmetric can only be up 50.
Yeah.
So I think that's something for, again, not for a professional like Michael, who's that's his calling, his learning through the proper way to do it, but for more sort of image crowd outside, or for people who want to do that, I think it's just general cautious thought as well.
Yep.
Yeah.
When they put their precious capital into doing that.
Yeah.
That's the risk they're up against.
Yeah.
Right.
You have to constantly evaluate your risk reward, especially in your short. You have to have the downside scenario, right? How much can you see the stock going up?
Yeah.
That's why I think a lot of short sellers went out of business after shorting Tesla. That's part of the reason why, because the risk reward, they didn't really get it right? The downside, they did not see Tesla just taking off.
Yeah.
So in that sense, I would also bring a different perspective in terms of a lot of business going out of business. We talked about it last night. Like more business going out of business than being a compounder. So as a short seller, if you avoid those compounders, then the statistics is actually in your favor to make a
Exactly right.
profit
Yep.
because more business go out of business if you look at S&P 500.
Yeah.
Yeah.
And that's exactly right, because on the long short side, if you avoid the compounders, you find a business go out of business over time, he's talking about over 2 decades, since 2000 to now, a lot of S&P 500 companies fall out of the index, right?
Yeah.
You have opportunity to win in that sense.
Yeah.
Same on the long side. If you don't pick the right compounders throughout your lifetime,
Yeah.
you never have alpha.
Exactly.
Like the most, so 1%, so basically, and Ryan and I think in the future we'll discuss this, the statistic data, and shout out to the Compound podcast by Red House Wealth Management, Josh Brown, he touched on this and a few others as well. I think Mike Santoli on CNBC talk about it, show charts on this. For the last, so from 2000 to now, 25 years now, right? The entire S&P 500 index brought a tremendous amount of return, right? 500 companies. Those returns came from 1% of the companies. So if you didn't pick the top 1% of that, so basically about 5 of that 500, if you have 0 position on those 5 and have all the have your positions fully in the 495, you don't beat the index at all.
Yeah.
So, and also something around top 7 or 10% of the S&P 500 companies, so 50 of them, makes 75% of free cash flow. Makes 75% entire 5. So the other ones basically just kind of tag along as a bunch of slackers who's clinging to the index, but they generate most of the free cash flow.
Yeah.
So on the long side, if you don't pick the right winners, then you're going to underperform. You're going to do okay, but you're not going to, then there's no point to active investing manage the index. So that's also, so what he touched exactly the other side of the coin. That's just like
Yeah.
that. Yeah. Or just selecting a team, drafting picks as a GM. If you miss the superstar of that generation, you're not going to have championships, right?
Yeah.
We talk about this, indulge me on the basketball analogy.
Yeah.
So I talk about often. Last night we have this one very simple example from a year of 2012, 2012 to 2022. In 10 years, LeBron James won 4 championships, Steph Curry won 4 championships, Kawhi Leonard has 2. That's it.
Yep.
If you don't have any of those superstars, all the other draft picks, trade moves, roster change you do, if you goes to win, basically did nonsense work.
Yeah.
Because 2 guys won 8 out of 10 championships and 1 guy has the other 2. That's it.
Yeah.
So it's a very sort of top effect, if you will.
Yeah.
So both sides are true.
As a short seller, you have to have extreme. As any investor, you have to have extreme conviction.
Right.
But as a short seller, you're always updating your analysis because it's on a shorter, time frame.
Yeah.
How do you find full conviction in a position that you want to take? And then the second question that's more of a follow-up is, do you think retail investors are capable of making that sort of high-level analysis and conviction to be able to enter a position like a short?
I still think, because public equity investing, the beauty of it is that if you do the research, if you do the hard work, you can build the conviction yourself. You can come around to a variant view, right? If you do the channel checks, if you call the experts, if you really just doing the field research, and if you put in the work, you will be able to build that conviction over time. And I think one thing from my only 11 months period of time is that once you find a good setup, the more stones you turn, usually the more dirt you will find. And that increases your conviction on the short selling side,
Yeah.
right? There are a lot of signs from the short selling end, right? Are the insiders selling, right? Are the short interest just going to change? And are the organic growth, are management doing different things on their end to mask the not growing business, or decline of the business? Are company changing disclosure? Are company changing the reporting segment? Are company changing even their accounting, right? A lot of those signs, and those signs start to add up to a narrative, right? So this is exactly what they're doing and why they're doing these things. Getting to the why is really important for your conviction building. And I do believe any retail investor that has the skill and the financial knowledge and willing to put in the work can do it. Yeah.
That makes sense. The final question I have in regards to short selling is not necessarily more about the investments, but the psychological aspect of being a short seller.
Yep.
So you make profit as a short seller when a company fails, jobs disappear, sometimes retirement accounts are just gone. We saw with obviously the 2008 crisis, Michael Berry made a lot of money with that short, but a lot of people took money out afterwards because they were like, listen, this is crazy. The market's up in shambles. I don't know if my money's safe. People are losing their money. I guess with that sort of, when you make profit on other people's losses to that extent, I know you'd say maybe you're exposing like a fraud or poor management or overvaluation, and in turn you are, stopping a larger crash from happening down the line. But do you ever psychologically wake up and think, I'm rooting for a company to burn so I can be right? And if so, do you think that's more of a bug or a feature of who you are?
That's
Great
a great
question.
question.
Yep.
That's a great question. It's a feature for sure, I think.
Okay.
I like to think that in efficient market, you have to have both sides, right? There's no way for a market was full of bulls and think, okay, we're not tricking people into buying some things that they're not worth, right? So you are helping with the efficiency of the market is how I approach this. And meanwhile, if you're a bad business and you got capital behind you, you're destroying value. Those companies should not be destroying shareholders' value, and they should return those capital, or they should just be out of business. And a lot of times we see business doing this in times of exuberance, is that they take in outside capital, and you know what companies do when the stock price is too high? Oh, they issue more stocks,
yeah.
right? And then destroy value with terrible capital allocation. You have to put them in the right spot. And if they're undervalued, if the short sellers are around, great. Then the company will buy back shares. They'll happily do that, and then reallocate those capital into their growth engine to invest those. So short sellers is a essential component of an efficient market.
Interesting.
Howard Marks has a great quote of capitalism without bankruptcy is like religion without hell.
Right.
Religion has hell as a setup to say you conduct good behaviors. After you die, I promise you go to heaven.
Right.
That's the setup. Capitalism, if you don't have failures, then people in the casino just gonna play, and eventually value is being destroyed. People raise money to do dumb things, and then Enron happens, Sam Bankman-Fried, FTX. You can have a crypto exchange that steals people's money.
Yeah.
Right. It's totally fine to have an exchange. It's great. Like Coinbase is around, legally licensed. Very well. Robinhood is around. You trade, no problem. But you can't be like, I bought $100 Bitcoin, but guess what? The exchange pocketed 50 though, right?
Yeah.
So that kind of behavior, for example, if that was this is actually the point to go. If we have more public traded, especially being private market being so big now, if you have more public traded securities like FTX, that will be called out earlier.
horrible.
These dudes would be on it and be like, short interest like 50% because the guy's continuously being Bahamas in his sandals and something looks off. However you underwrite the situation, right? For me, I might underwrite the people.
Yeah.
Right. For you might underwrite the price or whatever is going on at FTX and be like, this is the problem, and he shorted it. Then probably wouldn't destroy as much value as before, right? Because that would be highly doubted already, right?
Yeah.
So, and obviously there's times people are wrong, times people are correct, right? Like people can say in 2018, why the reason why it was heavily shorted, not only because the business side issues that Tesla was dealing with supply constraint, he went on, our guy Elon went on Joe Rogan and smoked some pot, and then people go, and it says funding secured and all that, and people go, wow, this is a problem. So he looked like a fraud, right? Or somebody who's lying about situations, and then heavily shorted going. Then, if Elon turned out to be a Sam Bankman-Fried, that would be a great thing, right? So that most people be scared, be like, wow, it's heavily shorted, stocks are down. I'm not gonna put my precious little savings as a high school teacher to buy $500 Tesla stock.
Yeah.
That's actually a great thing, right? To get people's, simple people's money out of that market, right? So in that way, especially I think, this is obviously outside of our control, but like, if I were to run an SEC or something, definitely add more regulation to private markets, either to make them liquid, right, or to make them. Otherwise, these situations can be called out, and right, and the Venmo situation as well.
Exactly.
So that's the moral value to it. That's and Howard Marks, great guy, with that quote, and his memos are very helpful. Management 2018 was very helpful for early in my career too. So capitalism without bankruptcy, it's like religion without hell. You need a negative incentive system as well.
Yeah.
So.
I guess this jumps into a little bit of Robert's topic, but I wanted to bring it up. Do you think that living in New York has any impact on you being a short seller, and that how does that affect your personality when it comes to investment strategy?
That's smooth.
Yeah. I think living in New York didn't really contribute to the fact that I'm a short seller. It's almost like a human nature to me that I find this as my edge to be naturally more critical and seeing things in that lens.
Yeah.
And a lot of people see things from a more optimistic lens, and I see things from more critical lens. And for me, I think Columbia's education really helped me to build that confidence in myself to leverage that into a strength of investing.
That's great.
Because I think at first I was on your side too, right? Short selling is dangerous. It's really hard, but it also is why it's so attractive and why a lot of managers like short ideas, because short is a great product. It delivers uncorrelated return. It naturally just hedges out your beta and it makes your stock look better. And there are always managers welcoming short ideas, but the long ideas is a little bit different. Everybody underwrite different long theses.
Yeah.
But short ideas are welcomed by almost all if it's really good, right? But they don't exist that often, and when it comes around, it'll be great. So for me, Columbia's education had a class called Mental Models, and a lot of professors in there are professional short sellers, and they invite guest speakers like Steve Shore, who runs a short-only book at his last fund. So they are doable, and they deliver value directly to hedge fund owners, hedge fund managers. And for me, I can see that as a sustainable career. But coming to my PA, I would do long bias too. Yeah.
So
Yeah. And Michael is a proud pure value capital investor
Yes, sir.
and LP,
awesome.
which I appreciate.
course.
That conversation happened during a jacuzzi session in San Diego.
Heck yeah.
That Mike said, can I please get an allocation now? So absolutely, I'm very happy to help you take care of some of that too.
Thank you, brother.
on the PA side. But I think very good point on a big city conversation.
Yeah.
I think that's one of the things we want to touch on earlier on that part two, that sort of life philosophical conversation, and we'll dive into this, and we'll likely end around this vast topic of. So if you think about how you've been in New York for the last 7 years, and then I travel there often for work and stuff like that, and I think you touched on this. I think his name is Scott Barkley, from currently one of the managers at Stan Drucksmiller's family office, right?
Right.
He talked about how being close to the West Coast companies, and he had an understanding of the technology and the underlying, even the engineering aspect of it, help him to underwrite these products and invest well. And then New York is obviously the financial capital of the world. There's a lot of, especially transactional finance going on, right? So for me, that in my early 20s, obviously I spent a lot of time there. I wanted to live there at the time, but due to my wife's job at UCSD, being a PhD there, so moved to San Diego and lived there. And most of my track record returns are actually done right next to La Jolla, and being San Diego, away from sort of the center of the financial transaction, if you will, and be able to, now looking back, that provided a level of clarity of thinking, kind of like Omaha, Nebraska, kind of like clarity of thinking. What are the, so I have my obviously biased view, but I want to get more to sort of your understanding of, and you grew up in Shanghai as well, so I know a big city, of how being in the financial center of things changes one's, not only from a career, not limited to shorting a stock or a portfolio change, but more like a lifestyle wise for a young man. And also, you turned 30 this year.
Right.
Also your birthday, March 28th, right?
Yes, sir.
And then I'm 31. Ryan just turned 23, fresh graduate. Like, also, this can help people who are 21, 22, 23 when they
Right.
decide, right? They might go to a school in Ohio, but after they graduate, they can go to New York City, or they can choose to take another job on the West Coast, or Texas, or Ohio. Like, what is your thought process around that, from different age perspective, from different industry perspective as well? Give it as much as we can, help the world.
Right. Oh man. I had a big apple.
No
dream.
pressure at all. But
Yeah.
No pressure at all.
Right.
Yeah.
Yeah, I had a big apple dream, and I wanted to live out the life of a New Yorker.
Yep.
And always had watched those in shows and movies even
Yep.
before I came to the U.S.
Yep.
Friends,
Yep.
right, How I Met Your Mother, they all
Yep.
depicted the New York life as
Yeah.
very appealing and attractive for a
Yeah.
young male. And yes, you do have a lot of fun in New York City.
Yeah.
But I do think there are a lot of distractions too.
Mm.
And for a young man starting out your life, I think if you can resist the urge of temptations, and you will actively seek out them. Like you want more time, you want to go out, and you want to just act a little wild in a big city setting with more possibilities, with without the time dedicated to yourself and focusing on what your cause or what your calling is, that could be a little bit damaging to where your life is, like down the road. I don't regret my time in New York because I think it will always be an itch in my heart if I didn't really experience that.
Yeah.
Right. But being able to understand that this is not a part that contribute to your long-term success is really important. Is that sure you will want to experience the life there, but if you cannot get out of that vicious cycle of continuously seeking out stimulations from the external world, from the peers, from people who look greater, who have a sicker job, who has more prestige, who has more privilege, it will be a dangerous loop for you to keep pursuing things that won't make you happy. And I think there is value of staying away to practice that principle. Yeah.
That's great advice. As a 23-year-old, that's very important, for anybody my age to be hearing. Let's flip that to California. Do you have an urge to live in California? And
Yeah.
do you think that there's a vicious cycle here by any chance?
Well, I'm not as eloquent in the Californian culture.
Sure.
But I do see the appeal. Great weather, and Robert has built his career out here. And for me, at my age, I think about starting a family now. And I think being a good weather, being good company within miles with my closest friends would be extremely important to me. And also being in California will also be closer to Asia, where I can see my family more often. I think there are a lot more perks for me to live in California at my stage rather than living in New York. Yeah.
That's great. Well, we're looking forward to have you here soon.
Yeah.
Thanks for being on the podcast, Michael.
Thank
Robert,
you.
thanks for having me again. This was a great conversation, a lot of insight for young people, old people, smart people, anybody. It's very important to have people like you here to teach the next generation, and I'm looking forward to having many more experiences with you and with the podcast. This has been great. Thank you
Likewise.
again.
Thank you.
Yeah, and shout out to our producers, Steve's Film. Andrew's sitting across from me right here. So this podcast it can be possible. It's not even just brought to you by Steve's Film, but it won't even be possible without his help. We met, speaking of West Coast, in a party in Los Angeles, and we become friends and stay in touch after. And this is a piece of cake for him. He shoots action films and big time movies and stuff and projects like those. This is easy, and he's gracious enough to give Pure Value a gift of a bottle from his company. Again, Steve's Film. Grew up in Houston, based in Los Angeles now, and this combination of the Lone Star State and the Golden State, if you will, and
That's the best combo.
That's right. And Ryan went to school in Dallas, SMU.
Yeah.
So, and we got Empire State here. So, and then Jacob sitting across from us as well. Thank you for being here. So again, shout out to Steve's Film. This wouldn't happen without you guys. I always had this media vision to have the platform to sort of leave a legacy. And then I think at the beginning, during the intro, I forgot to mention was when Roy and I started our first podcast, which a good friend of mine, RZ 2 Cents, was this idea of just simply from a family, and Ryan being a big family person, you understand as well. Ryan, Michael, big family guy as well, in the sense where your parents get to see you when you grow up, right? As you get older, your parents still around, they get to see you, who you become as a more mature version young man from a boy and grow up. But don't you ever wonder what your parents looked like when they were younger and how they were doing, what he was thinking at 23,
Yeah.
right? What your dad was doing, what your mom was doing at that time, right? They tell you the stories, but you don't get do you get footages? Do you get writings? If they write diaries, maybe, right? Things like that. So my selfish goal of doing this, always is to actually, this is for my children and grandchildren, for you children and grandchildren, for your children and grandchildren, in the sense where when they want to look back later on in 2048, and they can go, oh wow, okay, so my dad was like hanging out with this Michael guy at like 31, and like, wow, Ryan, like Uncle Ryan, like my kids are gonna call him Uncle Ryan, gonna be like, the first time I met, they'll be like, Ryan, hold on, he was 23? Uncle Ryan's like 50. Like, I had his Persian food, it's pretty good, but like he's 50, with a big beard, and now he's clean shaven and all.
Yeah.
So anyhow, you guys get the point. That's the idea of having this and hopefully for the nostalgia purpose, we'll look back and hopefully anyone who can benefit from it will be great. And a different episode, I want to have the world belongs to, and also to end on this quote of, sort of we will always aim to be our friend circle and us at Pure Value, to know to know everything about something. So any subject, let's say he's a great short seller, let's say he knows everything about that. You know, I'm into value investing, the 3 Ps, or other things, or basketball analogies, or whatever. You want to know everything about something, and something about everything. So on a podcast, in current state of media world, there are journalists like Joe Rogan Experience, all kinds of people goes on. There's various specialists, right? There's relationship podcast. There's like very, let's say, female targeted podcast. There's finance, like expertise podcast. There's legal podcast, right? My goal is actually to be both. That's the Gemini that's in me. It's to have everything we can talk about here, but also we have a special focus as we are investment professionals and being in finance and on the buy side and stuff. So we want to know everything about what we're talking about when it comes to investments, and a little bit something about everything else. So that's the vision as well. Hopefully it can come true. And again, thanks for everyone being here, and shout out to Stevie's film. Without this wouldn't happen. Thank you for being here.
Thank you.
Thanks, Michael.
Thank you, Ryan.
Thanks, Robert.
Of course,
That's what I'm talking about.
Yeah. Cheers.